You bet. All right, folks. Well, good morning, at least here on the East Coast. Good afternoon or good evening, depending on where you are in the world. Welcome aboard. My presentation this morning is called Trading the Death Star. And if you're not a Star Wars nerd or you don't have kids like I do, if you don't know what the Death Star is, man, in the Star Wars, not trilogy, what they made 6 of them. The Death Star was made by the evil Empire, more or less to take over the universe, and got damaged a little bit, almost got blown up, survived that, and got bigger and stronger. What does that have to do with trading? Everything, because there is one stock that literally is the Death Star right now that's taking over the universe, and you want to be on board with it. So along the theme of space, let's stick with flying, since I was a former Navy fighter pilot. Quick question: which fighter aircraft would you rather fly? Okay, I'm going to give you 2 choices. There's your first choice. Choice A. Look at that. Looking at that cockpit makes my heart race, and not in a good way. That, folks, is an F4 Phantom. 300 switches and dials in that cockpit. The pilot would have to spend a lot of what we call heads down time with his, you ready? Head down in the cockpit, instead of looking at it, enemy aircraft or potential surface air missiles or AAA anti-aircraft artillery fire. Man, that is just, there's a lot going on in that cockpit. And as a matter of fact, you know how labor intensive this aircraft is? They threw another dude in there. There's a backseater called a WISO, a weapons system officer, to run the radar, because the pilot's got so much work to do. That's just great looking airplane, looks good, fast. It's just not good for the current environment. That's your first choice. Here is your second choice. Check that out, folks. 2 flat panel displays. That's it. Do you see any of those, what we call steam gauges in this cockpit? You don't see anything like that. Folks, this is the F-35. This is the Lightning II, the Joint Strike Fighter. We call this jet the Wonder Woman jet. It's invisible to radar. If you paid attention to the news about a month-ish ago, 2 months ago, it wasn't super covered here, but a guy like me follows all this stuff. Mysteriously, near Iranian nuclear plants, things were blowing up. Weapons depots were blowing up. Really strange. Why? Israeli F-35s were destroying them. Never seen by radar at all. Okay. Matter of fact, when the pilot looked, if you've ever seen an F-35 pilot, she looks like Darth Vader. Why? Look at that the helmet. There's nothing, everything's displayed on the visor. They look like a space man. When they look down, they don't see their feet or their legs or the cockpit. They look through the aircraft. There's sensors all over the aircraft. It's incredible, folks. You look out and there's like bubbles. If there's a bad, a surface air missile 50 miles away, the jet puts like a big red bubble around it to the effective altitude of that missile. Like, warning, don't fly into that red bubble. It's insane. My point, folks, is that you'd obviously rather fly this fighter aircraft, and here's what this has to do with trading. Real quick, it's going to be a brief. This isn't a long, it's called a brief. So no distractions, silence your electronic nicotine, because what I'm about to tell you, you've never heard before. So at the end of this brief, my promise to you is to give you an up-to-date intelligence brief about what's going on in the market around the globe, show you the only stock you need to own. And I'm serious. You don't need to own another stock in your life other than this one. And if you can't, because it's a little pricey, a good substitute to trade. I trade both of these in this service, okay? Ladies and gentlemen, as Anna said, my name is Matthew Buckley. My call sign's Wiz. I flew the FA-18 Hornet for the United States Navy for about 15 years, graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and was also an adversary, a bad guy. So I was a good bad guy, right? Our jets were painted like enemy aircraft. We got airborne and we'd fly enemy tactics against our good guys to to prepare them to head overseas, right? We're tougher on ourselves in training than any other threat we'd ever meet around the world, right? Flying over Iraq was actually a letdown. It was boring compared to Top Gun. So what's this have to do with trading? Absolutely everything. Folks, you don't join the Navy to get rich, right? You don't, there's, unless you're an admiral and then you get out and work for a defense contractor. But me, no, I joined the Navy to serve my country. Born and raised in South Jersey, one of 6 kids, Irish Catholic kids, lower middle class family, always taught service above self, loved the ocean, loved the beach, wanted to serve my country, wanted to fly, and that kind of like a Reese's peanut butter cup turned into I wanted to fly for the Navy, but was always interested in finance, right? My dad would be sitting there drinking a cup of coffee with the newspaper in my face every morning when I was growing up, and on the back page was, oh, remember this? I'm dating myself, but remember where you got stock quotes in the newspaper? But my dad, Dad, what's this? What's this hieroglyphics? He's like, nah, those are stock symbols. And the look at McDonald's. Let's say you were a shareholder in McDonald's and you go, buy that Happy Meal today, you could potentially make some money as a shareholder. That fascinated me. So as I started, flying and fighter aircraft, I started investing in trading on my own. I remember, being in 1991 down at Naval Air Station Key West, Florida, and sending a $25 check to USAA to get in the Aggressive Growth Mutual Fund or something like that. So what did I do? I applied everything I was learning as a fighter pilot, being disciplined, having a strategy, contingency planning, knowing when to get out of a bad or good situation before it got worse, and being disciplined, having a checklist, right? Implementing tactics that support a strategy. Guess what happened? That worked so well that I popped up on the radar of one of the largest volatility arbitrage firms in the world, headquartered right there in the Chicago Board of Trade. That was our trading firm right there. See those big, beautiful windows? Man, I had a blast. First of all, I love Chicago. You can keep the weather, but I love the people, steak, wine, love downtown Chicago. I helped build a hedge fund when I was there. I helped build the retail brokerage known as Options House when I was there. And it's funny because I went from kind of being this little old retail trader to the big leagues, man. I felt like Valentine in trading places. I found out that the smart money ain't necessarily that smart. You are just as smart, if not smarter. I was the managing director of strategy for this multi-billion-dollar Vol Arb firm, and I was also the founder and CEO of the Options News Network, ONN.TV. If you watch CNBC at all, John and Pete Najarian, I know John and Pete from a time in Chicago, great Americans, bigger than me, can kick the shit out of me, so I'm going to say that. No, I'm kidding. They do the best they can on CNBC. But CNBC pays lip service to options. It's an afterthought. Me, founded the Options News Network, went from me to 80,000 people in a year. I shot 3 or 4 programs on the floor of the SIBO, the CBOT. Even we did it was called the Options Cocktail. Every Friday, I went to a trader bar around the Board of Trade, got dudes liquored up, and really found out what was going on inside the options market. Well, after a certain while, I said, I'm pretty damn sure I can do this on my own. Moved to South Florida. I lived down here in God's waiting room in Boca Raton. Started Top Gun Options over 10 years ago, and we've been having an absolute blast ever since. I do some charity work, supporting police officers here in South Florida. Lost a sister to a drunk driver, unfortunately, when she was a freshman in college, so I support MAD. And then I started my own foundation recently called the Top Gun Fighter Foundation to try and prevent veteran suicide. We use the phrase, you put the ladder down. When I made it on Wall Street, when I made it in the military, did something cool, you don't pull the ladder up, man. You put the ladder down and you help your brothers and sisters out. One of the other reasons I started Top Gun Options. Okay, that's enough. Let's get airborne and let's talk about what we want to talk about. Real quick, that intro, man, if you ever come to one of these things and like they jump right into everything and you don't know who they are, that's kind of nuts. I don't understand that. So quick intro about me. Now let's start talking. What I'm about to tell you, I don't know if it's going to shock you or not, but let me try anyway. Wall Street's lying to you, right? It's just simple. That might not be shocking, but here's what is going to shock you. Here's the biggest lie you've heard since day one of investing. You ready for this? You cannot put all your eggs in one basket. Everybody give me a vertical head nod. Yep, you know what, Wiz, I have heard that. And they're right. They're wrong. It's a lie. How many of you have heard all this stuff? Why diversification is important. You must diversify. 20 rules for diversifying. You must diverse. It's wrong. It's a lie. You ready for this? Diversification is for people who don't know what they're doing, right? A diversification is for stupid people. Now, that's maybe too direct or blunt, so let me use this guy's quote, or not this guy. This is why you've been told to diversify. Why have you been told to diversify since day one of trading? Because of guys like that. Say it with me. Commissions. Everybody's seen the movie Wall Street or The Wolf of Wall Street or Boiler Room. Here's what happens, man. The managing director, opens up his office door in the morning and says, okay, fellas, I know we put the little old lady in tennis shoes in this stock yesterday. Today it's this stock. Go, pick up the phone and start dialing. Yeah, I know we told you. Yeah, that's still a great stock. I'd get out of that today and I get into this one now. This one's great. It's churn. You ever hear the term churn? Whenever you hear the word broker, folks, I don't care if it's a real estate broker, a yacht broker, or an aircraft broker, they work on what? Say it with me, commissions. They also get paid for order flow. So the more you trade, the more they make. So of course they want you in a ton of different stocks and ETFs because it benefits them. But diversification is for people who don't know what they're doing, correct? Yes, everybody say it with me. This guy said it a little bit nicer than I did. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Let that sink in. The only stock you need to own for the rest of your life is Amazon. Don't believe me? I'm going to convince you. First of all, let's do a picture. I've never seen anything like this. This week, Amazon announced their Prime Day. I think it's 2 days. I think it's the 13th and 14th of October. The numbers that they're forecasting, folks, I've been doing this for, I'm going to date myself. I've been doing this for 29 years. I'm physically stunned at the math. Their last earnings, I just couldn't comprehend the math. I think they made, what was it, $100,000 every second? It just doesn't compute. And it's only getting better, folks. Now, don't listen to me, man. David, make 51 grand. Jim, I signed up. The name of this service I'm going to talk to you about is called Solo Amazon. Just made 300% on my trade in a week. Look at this guy, Dennis. Wiz, this just keeps getting better. My Amazon synthetic call for the June 21 expiration that I opened on the first day of Solo is now a whopping $100,000 on one contract. I wouldn't believe it, but I just checked and I do have a pulse. Sam sold Amazon 3,000 calls too early last week at 122, but still made 80 grand. Ladies and gentlemen, before I sit here and talk about sunshine, lollipops, and unicorns, I'm going to tell you the threat. I'm a fighter pilot. I'm an options trader. I don't look at, hey, I'm awesome today. I look at how I'm going to suck today and what's the risk. What is the risk of just trading a solo stock, just one name? Anybody ever hear of this firm called Lehman Brothers? How about Bear Stearns? Jim Cramer knows about Bear Stearns, doesn't he, folks? Why don't you Google that? At the height of the financial crisis, right? He was screaming, frothing at his mouth about, you're an idiot if you don't buy Bear Stearns here. Bear Stearns is a steal at $70. 2 days later, it was at zero. Pets.com, Enron. I could, for the rest of my time in this brief, I could sit here and list companies that have gone to zero. Stocks can go to zero. That is a risk. However, Can anybody tell me real quick, what is the common theme between those examples that I just gave you? You don't have to write it. I'm going to tell you. Guess what? Lehman Brothers, Bear Stearns, they didn't own a thing. I don't even think they owned the sign that the dudes were taking down. They owned paper, folks, right? What about Pets.com? What did Pets.com own? A stinky sock puppet and a domain name, Enron. Enron was a middleman of electricity. I don't even think, I know, they didn't even own the building they were operating in, folks. They didn't. So if you're investing in something that doesn't own anything, the stock can go to zero. How about Amazon, folks? I used to do consulting down in Miami for an Amazon fulfillment center. It's bigger, yeah, it's bigger than an aircraft carrier. In full disclosure, I used to fly for FedEx. I hated it. I'd shown up to work at midnight and flying till 8 in the morning. No, thank you. But anyway, I had a buddy in corporate call me like 6, 7 years ago. He's like, dude, I just heard that Amazon is leasing 5 jets. I'm like, done. I'm like, you guys are in trouble. Jeff Bezos is going to build his own FedEx, UPS, US Postal Service. He's going to leech off the Postal Service as much as he can, and then he's going to, when Trump wanks about it too much, he's got his own. Take a look outside your house right now. You see that blue truck that drives by that says Prime on the side? So folks, Amazon owns stuff, right? AWS, Amazon Web Services, is essentially Microsoft. And here's what's funny. Well, here's another potential threat, like I just said. 3 years ago, Donald Trump woke up or didn't go to bed, depends on who you believe, started ripping Jeff Bezos, the Washington Post, and Amazon to shreds. They're destroying the post office, they're using them, blah, 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 blah. He did this about 3 months ago as well. You know what Jeff Bezos says? He doesn't say a word. He just keeps going about his business and using it. Good on him, right? So it's, and Amazon has some other issues as well. Anti-competitive and criminal probe and all sorts of stuff. Ladies and gentlemen, at the end of the day, guess what? Even if whatever alphabet soup, anybody ever hear of Standard Oil or Microsoft or IBM or AT&T? Whenever the government starts going like, hey, you might be really big, it takes anywhere from 5 to 10 to 15 years to come up with an opinion of like, maybe we should break this company up. And Jeff Bezos, the world's richest man, do you think he doesn't have 8 kabillion attorneys to fight that until the end of time? But here's what's funny. I don't know if he would fight that if Amazon tried to be broken up. Folks, the parts right now are bigger than the whole. Like it's like Mercury. If they broke up Amazon right now, Amazon Air would be a massive competitor to FedEx, UPS. AWS would be Microsoft. You'd make little Death Stars, right? So it's absolutely incredible what this thing is doing right now. Now, I'm going to be honest with you. I at Top Gun Options, I like to tell my members that I wear 2 suits. I wear a flight suit. I'm going to tell you how it feels American. As American, I think it's awful. They don't pay their employees enough. They blah, blah, blah. I'm going to tell you all that stuff, and then I'm going to go, at the end of the day, I don't care. I'm going to put on my Armani Wall Street suit and say, I think they should cut the pay of Amazon workers. Why? Because there's a lot of people unemployed that would be dying for a job. I go Gordon Gekko, man, right? I'm here to train you how to make money. I'm not, like he said in the movie Wall Street, you want a friend, get a dog. I'm going to teach you how to invest and make money. But at the end of the day, I'm also going to tell you how it feels American. And I think Jeff Bezos is a disgrace. Okay. Now that I briefed you on what the risks of trading just a solo stock are, let's talk about the benefits, man. Guess what? You're trading the same name, and you can potentially profit no matter what direction it goes. If Amazon's going up, down, or sideways, yes, you can make money trading options with something going sideways. You stay focused on the news and the events that impact Amazon instead of a ton of different stocks or ETFs. You become an expert in Amazon, which reduces the time spent on all these other positions. I use this guy as an example. He loves being used as an example because I literally saved his life, man. One of my buddies is a doctor down here, back doctor in Boca. Reached out for help. Dude, I need help trading. Okay, great. Met him at a Starbucks, he booted up his computer, logged into his brokerage account, swing the computer around, and thank God he's a doctor because I fell out of my chair and hit my head. You ready for this? Dude's a doctor. 8 12-hour days, office hours, surgery. When he turned his laptop towards me and he showed me his trading account, he had 33 positions on. Folks, I do this for a living, and 5 is a lot. How can you even, up at my firm in Chicago, we had analysts, man. The analyst job was to just know one name inside and out, and sometimes they even got stuff wrong. An analyst who eat, breathe, slept this company and then would get an earnings report wrong. I'm like, look at you. So how can you, as a retail trader, expect to do good at all with all these names? It cracks me. It doesn't crack me up. It's bad. Doc sat there. He's like, I'm like, what is this? He's like, well, I think that's a pot stock. I think. I don't know. This one, I don't know. I got into it years ago. It's losing me a lot of money. I'm going to wait for it to come back to get out of it. I'm like, that's the dumb. I'm like, stop talking, dude. You're done. Get out of everything. Folks, this was Doc. Is this you? I'm telling you, folks, as a professional, 5 to 10 positions is a ton. If you got more than 5 on, man, and you're not sitting here for 24 hours a day, you're most likely having problems. I don't do that. I don't want to sit here 24 hours a day. I'd rather get my teeth drilled. I like to live my life, man. I don't do that, right? So this is what you want to do. Simplify your trading cockpit. Now, if you're sitting there saying, man, you are right, this is resonating, but still does not compute, I've been hardwired to diversify. Those folks did a good job on me when I started investing that I must diversify. Well, guess what? We also trade in this service. XLY. Write that down. That is an ETF, an exchange traded fund. The XLY is the consumer discretionary ETF. Take a look at the names, the holdings in the XLY. Look at the top holding of the XLY. 25% of this ETF is Amazon. What a great substitute. And if you're stuck on the diversification thing, check this out. Home Depot, McDonald's, Nike, I don't care for, Starbucks, I can't stand, Lowe's, Bookings, TJX, Target, GM. There is your diversification, ladies and gentlemen who still think they have to diversify. Now, when we look at the stock charts in a couple seconds, clearly Amazon's been blowing away the world and outperforming the XLY. But folks, Amazon is a $3,100 stock. XLY is $20 ETF. So folks, this is a good substitute to use if you can't afford Amazon right now. And we have people who trade for a couple months in XLY and get some nice coin together and then do what? Start trading Amazon. Okay. So how do we target Amazon and XLY for max profit? Easy. I'm going to teach you how to fly out into the future. You're literally going to hop in that Joint Strike Fighter, that F-35, and go out into the future. In the options world, we can fly out a couple years into the future and establish what I call a base position. I think 2 years from now, Amazon's a $6,000 stock. Jeff Bezos, like Warren Buffett, said, I'm never going to give a dividend and I'm never going to split the stock. So in all, what's Berkshire today? Berkshire Hathaway is a $320,000 stock, one share. So Amazon's going to do the exact same thing. So why don't we fly into the future and establish what I call a base position with a tactic, not a strategy. There's no such thing as an option strategy. It's called a tactic. Synthetic stock or a long call diagonal. And oh, by the way, as an options trader and a fighter pilot, I never went flying without an ejection seat. I will tell you how to throw on what we call a protective put to give us what? Some protection. And then after we have that base position out into the future, we trade what we call the front months. What are the front months? Well, ladies and gentlemen, you're sitting in the front months, October, November, December. Those are what we call the front months. If in the front month, Amazon or XLY are going up, what do? We trade bullish spreads or do some long calls. Going down, we do bearish spreads or sell front month upside calls. And yes, in options world, if it's moving sideways, we can do what is called an iron condor. So that's how we do it. Let's go take a look at the brokerage platform real quick. Let's take a look at that chart of Amazon, folks. Look at here's January, right? Amazon tends to be flat in January. Why? Because we're waiting for their earnings for them to tell us how they did with Christmas. This January earnings was insanity. They're like, we destroyed Christmas. Look at the stock, massive run in February, COVID. Oh, geez, COVID. This thing could maybe impact Amazon. And then what happened during the fascist lockdown that we went through? People sat at home and got on their phone and bought stuff or got a stimulus check, and Amazon hasn't looked back. Being Gordon Gekko right now, it's going to sound cold, but I'm Gordon Gekko right now. The COVID crash and disaster that hit this country was the best thing ever to happen to Amazon, period. I personally, let me put my flight suit on. I personally believe that the government should order Amazon, Target, and Walmart to shut down for 3 months to give small businesses that have been destroyed by Amazon, Target, and Walmart a chance to come back to life. Not going to happen. Now, let me go back to being Gordon Gekko. I think this is fantastic, especially if we get another, here comes the second wave. Isn't it weird how the second wave of COVID is happening right around the election? We can talk about that some other time. Now, take a look at Amazon recently. This was a monster run. Great earnings. Look at this. Of course, we were due for some of that, and this has been a gift. Amazon was up at $3,500. Where'd it go? Right down to the 100-day moving average, bounced off of it. So there's the 50-day moving average. There's the 100-day moving average. This is a gift. Amazon right here, right now, is a gift. Like I said, I would hop in my jet, my Joint Strike Fighter, and fly all the way out to the future and get bull. Look at that. Look at where we can be bullish on Amazon. 841 days into the future, January of 2023. When you become a member of this service, it's called Solo Amazon. We do it Monday at 2 p.m. This Monday at 2 p.m., I'm going to show you how we're going to hop in our Joint Strike Fighter and fly all the way out here. Now, I might not do that. Well, that sucks. No, it doesn't. Why? There is nobody in this room right now that makes money trading off the left side of a chart. Somebody tell me in this room, if you have a broker, if your trading platform allows you to trade off the left side of a chart, you don't even have to answer no, because where do we make money investing, folks? Out here. The right side of the chart is where you make money, right? So we have to project our thoughts forward in space and time. But what is the closest alligator to the boat for this market right now? I'm going to put a big wall right here. It's called the election, man. I've never seen the VIX futures short-term strike. What's about to happen to this country will be insanity. Amazon and the market has to kind of get over this whole election wall to keep going up. I don't think it will. I think we're going to do this type of thing. We might have a clear winner on election night, and then the opposite dude. There's no way on God's green earth Donald Trump loses and says on election night, you know what, Joe, great election, a time for this nation to heal, the better man won. That ain't happening. What's also not happening is Joe Biden saying those words. Hillary Clinton already said you should never concede under any. So I'm not going to ramble too much about this. What I'm getting at is I'm not going to put on my long-term bullish position now, because even though Amazon is the Death Star, it's not going to be immune to absolute insanity. However, Amazon will eventually put the insanity behind it, because what's coming up? Merry Christmas, Kwanzaa, winter solstice, whatever you celebrate, and Amazon is going to destroy Christmas again. So we can trade Amazon in here, and I'm doing it right now in XLY with my members. We're doing bear call spreads and all sorts of stuff. But the tactical, the strategic long-term bullish trade, I'm going to wait a little bit, because I think we're going to be able to get Amazon at a discount. Does that make sense? Everybody give me a vertical head nod. So I'm traded right now. So, we're good to go. Jennifer, I don't trade earnings. Do not ever trade earnings. It's gambling. How many times have I've done this when I was young in my options trading career. I got earnings right. I think they're going to have a blowout quarter. And breaking news, they had a blowout quarter. Yay, I'm right. Stock's down 10% after hours. Because remember, earnings calls, folks, are what? They're 50-50. 50% of an earnings call is what? Here's how we did last quarter. What's the other half of the call? Here's how we're going to do. So sometimes it's like, you're like, yay, stock's up after hours. I was right. And then it's like, but the CEO said the next quarter is going to suck. Oh, boo. Don't ever trade earnings. It's a coin flip. It's gambling. You know what I do during earnings for a name I'm in? I grab a bag of popcorn. I sit there and I watch. After the dust settles, then I trade. I do not trade earnings. Mark, do you think the big institutions are placing their bets for the quarter today? A little bit. Yesterday we made $24,000 trading the S&P 500. How? Did you see what happened yesterday? I got to stay on timeline, but I got to laugh at about yesterday. This is how stupid the market is. Here's yesterday morning. Rip your face off rally. Why? Breaking news, Steve Mnuchin, Treasury Secretary, is going to talk to Nancy Pelosi about the stimulus. This was the last day they could have done, right? It was 9/30. It was September 30th. Because on October 1st, the fiscal cliff kicks in and people, unemployment, and a ton of people getting furloughed. MGM, Disney, airlines. Yesterday was the only day they could have gotten something done. Yesterday, I sold a bear call spread on the S&P 500 here, here, and here. And then at 3 whatever yesterday afternoon, Mitch McConnell, I have no idea what anybody's talking about. We're not even close to Democrats on a stimulus bill. Slam. Look at this. We opened here on the S&P 500. Where did we close? So what I'm answering to your question, Mark, is this. The only hope for any pop in this market before the drop that I think is going to happen was a stimulus bill. There's a slim to none chance that's going to happen, and Slim just left town. There's a snowball's chance in hell of Nancy Pelosi doing a deal in front of the election to give Trump any sort of airspeed. I'm telling you, folks, I know this stuff. I know it like the back of my hand. Okay. So, all right. Well, let me get back on track, because I want to keep these folks on track. We're having an absolute blast trading Amazon and XLY. It's fan-effing-tastic. So here's what I'm going to do. The service is called Solo Amazon. Why? That's all we trade, and we trade XLY. It's our newest live trading service here at Top Gun Options. I do 4 other briefs throughout the week. Those individually are $167 a month. Okay. Solo Amazon, since we just trade Amazon, is our lowest cost service. It's only $97 a month. We finally got let out of prison down here in South Florida. I went out to a restaurant the other night. Bottle of wine I ordered was more than $97. Man, I like wine. So for the price of a good bottle of wine, you can get access to this service for an entire month. right? There's the URL, topgunoptions.com/solo-amazon-monthly. Okay, that's the URL, solo-amazon-monthly. Let me go ahead and pop that into the box right there, and let's bring up that page. Yeah, we love yeah, it is this service is fantastic. And yeah, hold on, let me just bring up the URL there. Yep, let me wrap, and then I'll take your questions here. Okay. There you go. Anna put it in the chat box for me because she's awesome. Let me so there you go. That's there's the page right there. Here's what you're also going to get. 3 skill-based manuals, primary, intermediate, and advanced. Folks, these are a must, right? This is your aerodynamics, engines, weather, meteorology. That you need these things. If you went to our web page right now, and wanted to buy these manuals, they're $197. So for all the political science majors and Navy guys like me in the room, hold on, Wiz, you're giving me $197 worth of manuals, and this is only $97? Yeah. You just made $100. That's a fantastic trade. My marketing team came up with this. They're like, this is what they call an irresistible offer. I'm like, I don't know if that makes sense. They're like, no, it makes sense to people. I'm like, okay. So technically I'm losing money here. These manuals are $197 and you can do this for a month at $97. Lisa, we have people to open a brokerage account. Most brokerage firms require what? About $1,000. We have people trading accounts from $1,000 to yep, I have 2 billionaires at Top Gun Op. They have their own home office that trades and stuff like that. But 2 of these guys that are I know still. So we got billionaires and we got folks with $1,000 as well. So Lisa, and any account size, I'm going to show you when I do my trades. Hey, if I'm doing this many contracts and it's this amount of risk, you can do this amount of contracts and it's this amount of risk. So, I think we have like 450 folks in the solo Amazon service. Everybody's trading their own account. I can't give you investment advice, nor do I want to. I'm going to show you what I'm doing, how many contracts I'm doing, and you can scale it from there. We're up 6 figures on our solo Amazon service year to date, up over 109,000. Andrew, don't you need 25,000? Can you please explain? Andrew, you don't. $25,000, I think you're talking about the day trader rule. I don't day trade Amazon. It's not at all. If you want to be getting in and out of stuff day to day, that's when what's it called? Pattern day trader rule kicks in, or whatever it's called. So no, we ain't day trading Amazon. So that doesn't apply to us. You don't need 25 grand. If you want to be a day trader, the SEC or the CFTC requires 25 grand. I don't day trade Amazon. I just showed you that, hell, the first trade I'm going to show you in Amazon is 2 years out into the future. So if you can't attend Monday at 2 p.m., don't worry about it. 80% of our members work. Guess what I do? I send out a text alert and an email alert. They fire at the same time. So if you're not in the brief, there it is, right on your cell phone. If I'm placing a trade, it's right on your cell phone. And then at the same time, go check your Gmail, go check your email. I send you a screenshot of the trade and a screenshot of the risk metrics, okay? Jeff, for someone who has never traded options, do the manuals teach the basics and get you up to speed? The answer is yes, but here's the better idea. And by the way, everything's recorded, right? So if you can't make the solo Amazon brief, it's usually about a half an hour, 2 to 2:30. About 30 minutes after the brief, because it takes about 30 minutes to render the recording, I post the replay. So if you can't attend, you watch it that night after the kids go to bed or whenever you get a chance. So again, you get the manuals, $197. Here's what you're going to get. Access to the solo Amazon live trade brief every 2 p.m. On Monday, the text alerts, the emails, the 3 skill-based manuals, and you get access to our online forum, which is called the Ready Room. I don't say his first name right. Let's just say Mr. Parmar. 200 grand on Amazon. Kevin, Amazon, synthetic stock, late to enter, up 200%, paid 8 grand, now 24. I'm not going to read all these because I want to tell you to do this. Right there. So let me see what your name was again. Jeff. When you go to that URL and you want to buy solo Amazon, speaking of Amazon, there's like an Amazon-like thing that in the next step in the process that says, hey, do you want access to these 8 training sessions? So the manuals are good, Jeff, but you can also get access, it's only 195 bucks, to me, 8 sessions from this is a call, this is a put, to this is a bull put spread, to this is a synthetic stock. You get, I think in those 8 sessions, they're about an hour and a half of training. They're fantastic. So the manuals are fantastic, but they are complemented by this live full throttle training. Okay, so if you don't know what a call or a put is, I'm going to teach you that from step 1 all the way up to, hey, here's how you trade an iron condor. So please, 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 if you're doing the solo Amazon 97 bucks, go ahead and take that, do the training as well. It just makes sense. Oh, here it is. Duh. Should have clicked to the next slide. Session 1. Here's how I trade. Here's my intelligence sources. Long calls, short calls, long puts, covered. Boom. Not going to read all this. There's for 195 bucks. Folks, there are other places that charge thousands of dollars for this, and it's a disgrace. It's theft. 195 bucks, man. I think, again, with my bottle of wine and my dinner, it was more than that. Jenny, speaking as someone who thought options only had to do with what shoes to wear, I'm now following and understanding enough to pull the trigger with my E-Trade account. Thank you, Jenny. I appreciate that, and I'm glad to hear. Jenny, it makes sense to paper trade, right? Before you put any real capital at risk, folks, make sure go to the simulator building. E-Trade's got a nice paper trading platform where you can. I didn't read a book on aerodynamics, folks, and run out to the flight line and get airborne in my F-18. I went to the simulator building. So please, 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 please do the same thing, right? Folks, at the end of the day, simplify your trading, right? Simplify. Would you rather be flying that F4 Phantom looking at 23 different however many positions you got going right now? This is what you need to do. Trade Amazon, or if you can't, trade XLY, or do both. So in the service, when you think about it, folks, if we do a long-term bullish trade on Amazon, that's a trade. What if I do a front month spread, like a bull put spread? That's a trade. What if I also have an XLY trade on? That's a trade. Right there, folks, that's 3 trades right now. Technically, right? That's 3 positions. And it's just in these names. That's pretty busy. So please, if you're like my buddy Doc down here and you got 33 names and it's nuts, simplify your trading, okay? Solo Amazon, trade Amazon and trade XLY, okay? All right, folks, I want to keep all these folks on time. Let me just jump in the chat box to see if there's any other questions, concerns. But good, awesome. Welcome aboard, Steve. It's only 97 bucks, folks, for 30 days. And like I said, you get the manuals that are 197 bucks. That's like political science major math can figure that out. We do. I'm glad you brought that up. We do have an annual. Annual. I'll give you, oops, I spelled it wrong. I will give you a 25% discount if you do the annual today. Okay, there it is. It's $897. Yeah, absolutely. TopGunOptions.com/solo annual. Let me put the URL in here before I leave. Solo annual. There it is. There you go, folks. Yeah, I love giving it. This is a 25% discount. If you want to do the annual today, I'll give you a 25% discount. Oops, that went to Anna. That's a pretty damn good deal. That's a better trade. Whenever I can make 25% on something right out of the block. Trader. Dude, I know all that stuff, and I completely agree with you. I'm a Bezos fan because he makes me money. I'm not a Bezos fan as a human being. All right, folks, I want to give Anna back control to keep her on time. As a fighter pilot, I want to be on time, on target. Have a great rest of your day. Happy hunting. Make sure you hedge, and God bless. Thanks for having me, Anna. I appreciate it.
Welcome, everybody. I apologize in advance. I've got some major tree trimming going on outside of my office here this morning. So if there's any background noise, I apologize for that. But hopefully you guys can hear me okay. Maybe just a quick X in the chat box to let me know that you can hear me loud and clear would be helpful. Always like to see where people are dialing in from as well. If you want to put in there where you're calling in from. Thanks, Muzadik. All right. Trader. All right. From Toronto. Awesome. Thanks, Harry. Edith. All right. Thanks, guys. I appreciate it. Jack says loud and clear. You're from Florida. All right. Well, I'm going to go ahead and get into our topic today, which is what I call the Slingshot setup. It's a setup that I've developed to help navigate market sell-offs as well as rebounds. And of course, we've seen a lot of those in the recent past, including in the earlier this year in the Corona crash. So I'm going to share my proprietary setup for how to navigate these volatile market conditions and help you guys buy low and sell high in volatile markets. So before we get into that, I'll read my disclaimer here. We all know that trading securities and options does involve risk. And of course, prior to buying or selling options, you must receive a copy of characteristics and risks of standardized options. And of course, you need a broker to trade securities and must meet suitability requirements. We will be going over some examples together today. And just know that any results that we share from our alerts are not indicative of future performance, although they may be based on actual trades and some may be hypothetical. Of course, due to the time critical nature of trading, brokerage fees, etc., we don't guarantee that anyone will mirror the performance of anything that we share on our session today. All right. So these are probably familiar faces to many of you on the session today. And these guys really have a lot of things in common, but there's one thing in common that they all have that you may not imagine. And by the way, if you don't recognize all these faces, they're all very famous traders and investors. But the one thing that they have in common that you might not guess is they've actually all bought high and sold low. In other words, they've all made bad decisions in their trading or investing career. And why is that? It's simply because they're human, right? We all make mistakes as traders and investors because we're all subject to human emotion and psychology. And in fact, much of the difficulty in trading can be boiled down to psychology. So this is one thing that we're going to be looking at together today. And we're going to cover how to overcome some of these drawbacks of trading and investing that actually cause a large number or percentage of traders and investors to fail over the long term. So you may have seen a similar psychology curve that you're looking at on your screen here at some point in the past. And basically what this shows us is the roller coaster of emotions that we go through as we trade or invest our accounts and our hard-earned dollars. So on the left side of the curve, typically when you enter a trade or an investment, we all have a similar goal in mind. We want to win that trade. We want to make money. So that can start out as optimism, enthusiasm, even euphoria as a trade, as we enter the trade or the investment and it starts to work out in our favor. Unfortunately, the vast majority of the time, people end up getting into these trades at the wrong time. In other words, when there's a high level of financial risk and the markets aren't conducive to whatever strategy we're trading, we often end up being greedy and buying at the wrong time. And then at any moment in time when the trade moves against us or the markets become more volatile or conditions are not favorable or conducive to the strategy, we end up going down this other side of the curve. We become fearful, anxious, panicky, and we often end up selling or exiting our position when it's really the best time to get in to the market. And then we end up repeating this process over and over. And this is really at the crux of why most, 90% plus of traders and investors don't succeed over the long term. And so we're going to solve this problem today by focusing on the psychology of failure, and I will then give you my proprietary Slingshot setup that helps overcome the drawbacks of the emotions in trading. So as I mentioned, anytime we enter a directional trade, the goal is to buy low and sell high. But of course, that goes against our human instincts. And instead, when a security is going down, we often end up selling it. And when it has already gone up, so in other words, we've already been in an uptrend, we end up buying. And we then panic when price is falling because we're afraid of losing money. And we buy when it's rising because we're afraid of missing out. It's that whole fear of missing out or FOMO mentality that causes a lot of people to enter trades too late after the move has taken place. And then to compound that problem, as we just saw in the psychology curve, we're wired to repeatedly make this same mistake. So we buy buy high and sell low because that's what our emotions tell us to do. So without a solid trading plan, we're really vulnerable to our emotions. And if you're lacking a strategy that can identify momentum shifts, meaning you don't know when to get in or buy low or get out and sell high, this can really pose a major problem for inexperienced traders and investors. And not only inexperienced traders and investors, but even experienced or professional traders and investors face these same difficulties in trading and investing. So what we're going to do on our session today is we're going to turn the tables. And it's that old Warren Buffett adage, be fearful when others are greedy. And to add to that, we're going to be greedy when others are fearful. So we're going to turn the tables and take a contrarian approach to the markets and to trading and investing. Okay, so here's what I'm going to give you guys on our session today to make it easier for you. You're going to discover the Slingshot trade that has worked 100% of the time. Now, this setup doesn't present itself all the time. There's very specific market conditions when this setup arises. But when it does arise, going all the way back to the beginning of the market, this setup is played out on the major indices in the way that I'm going to show you 100% of the time. And in my 20-year trading career, I've never found anything else with that degree of accuracy. So I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. Now, there's virtually nothing out there that will get you in right at the bottom or out at the top, but we can get pretty close with the Slingshot setup. So I'll show you how to apply it to any market in any time frame, how to eliminate the majority of your losing trades. This is a really cool trick that I use in my own personal trading account that I'll share with you. And it can actually be applied to any strategy or system or market or time frame to help eliminate a lot of your losing trades. And then we'll look at some trade examples together today. And then if you stick with me to the end, I'll show you how you can copy my success and get my trade signals I use to make a living in the markets. So let's start out by imagining if you could buy low and sell high without any guesswork. That's every trader and investor's dream come true, right? All too often we use emotions and guesswork in our trading, and it's okay to have a little discretion or intuition involved, but you don't want it to interfere with your trading decisions or let them take over. So there's one volatility study that we're going to look at here in a minute that's actually made this possible since the beginning of the markets. It helps us trade in a way that we don't have to incorporate human emotions into our decision-making process. And we're gonna look at this. There's a lot of ways to use this volatility study, but there's one in particular way that you've likely never experienced or heard of that will help overcome the emotional aspect of trading and investing. And it's a unique setup that I call the Slingshot. And it's allowed traders to buy low and sell high in very specific market conditions with 100% accuracy if you follow the rules of the Slingshot. And it also warns of potential market sell-offs. So not only does it help us catch a rebound on a sell-off, it can warn us before the sell-off takes place. And that's another really powerful aspect of this setup. So once the bands of the Slingshot cannot be stretched any further, they must bounce back. And that's one thing you should always look for in a strategy or system is inevitability, some aspect of that strategy or system that must occur in order for it to work. So in other words, we don't want to play any guesswork here and not, have basically a flip of the coin where, hey, it might work sometimes and it might not work other times. Whenever I develop a strategy or system to trade the markets, I want it to be something that is inevitable, that must take place in order for price to move. And that's what this setup does. And this rubber band effect makes it possible to accurately identify tops and bottoms in the market. And we'll look at some charts together here in a minute that will demonstrate that. So we'll start out by looking at what is probably at the top of all of our minds this year is the COVID-19 pandemic and the corona crash that took place back in February and March. So this is a daily chart of the S&P 500 index. And if we were all in a room together right now, I could probably see a lot of cringing faces and a despair in the room, because this was a very painful period in the market and a very difficult type of scenario to navigate. We'd been in this long 10-year unprecedented bull run. The market just kept making new highs, going higher and higher. Thinking back to that psychology curve, on the left side of the curve, where people are becoming exuberant, overly optimistic, and euphoric, and they have that fear of missing out. They're getting in the market because they've seen the profits that have been made over the past years, and they don't want to miss out on any future profits. But unfortunately, on February 19th, when the market made an all-time high, and people are starting are still getting in the market and starting to get in a situation where there's a high degree of financial risk, this is actually where we should be fearful, not exuberant or overly optimistic, and take a contrarian approach and look at taking profits on any existing positions and getting out of the market. And I'll show you how to identify this and do this here in just a second. And then as other traders and investors are panicking and the market is selling off, we want to be greedy and take advantage of the sell-off, where we can get in at lower prices when most other traders are selling and take advantage of the rebound, getting out when other traders become overly optimistic and have a fear of missing out and they're buying. Okay, so this is kind of what the Slingshot setup looks like, and I'll get into more of the details on this here and show you how to identify it and trade it. Before I do that, I'll give you a little background on myself. If you haven't attended any of my past educational events, I have 20 years of experience trading the stock options and futures markets. I received my professional training at Morgan Stanley, and I'm currently the founder and chief investment strategist of Altos Trading. We have over 30,000 members who have taken our trading educational courses and alert services in over 100 countries across the globe. I'm also a hedge fund manager at Altos Capital, so I do manage money professionally, and some of the strategies and tips and tricks I'm going to be sharing with you today in our session I use in my hedge fund. And I'm also the founder and creator of the Trade Trend Signal software, which I'll also be talking to you guys a little about today. So by the end of our session, you'll discover one trade setup that's produced massive returns going back to the beginning of the stock market. In fact, this event is so reliable, it's worked 100% of the time. It's not failed even once, including in the recent Corona crash. And I often get asked, Jeff, how are we back up at all-time highs after such a catastrophic pandemic and a government shutdown and economic shutdown? Well, I'm going to show you why here in a minute, because it has nothing to do with the state of the economy, and it has everything to do with psychology and fear and greed in the market. And that's really what drives prices and trends in markets. But this setup does happen over and over again, and it does it with astounding predictability. So whether you're just starting out or you're a seasoned pro, I know we have attendees of all different skill levels and experience levels on the session with us today. It really doesn't matter. This is must-have information for today's markets. So what you'll discover is why volatility is one of the only leading indicators of market direction. And then I'll show you how to identify when markets may be vulnerable to a sell-off. And I promise this will completely turn your trading around once you can identify this. I'll also show you how to identify when the market is likely to go up. Okay, and then I'll show you how to determine exactly how far the market is likely to go up. This is one of the most difficult things that I've found in trading is once you get into a trade, it's what I call the trader's dilemma. How do you know when to get out, when to take profits? Because there's always that possibility that you have a really nice trade or a nice investment that you've made and the market reverses on you and erases all your profits. I'm sure we've all experienced that at some point. It's very frustrating. So if you could determine ahead of time the best place to take profits, how great would that be? And that's what I'm going to show you in the Slingshot setup. And then if you stick with me to the end, I'll show you how to get your hands on a tool that will change your trading forever. And I say that because it's changed my trading forever. It's allowed me to trade for a living and run a successful hedge fund. So let's start out by imagining a slingshot. As a slingshot's pulled back, the muscle energy in the bands is transferred to elastic energy. And after the slingshot's released, that elastic energy is transferred to the stone as energy of motion. And this is what's referred to in physics as kinetic energy. And I use this analogy because kinetic energy can actually be applied to the markets in terms of supply and demand. So supply, of course, would be selling pressure, and demand, buying pressure. And this is a really great analogy because once the bands become overstretched, it gives us a buy signal. And just like a slingshot, we can enter the market with high confidence that prices will go back up to the initial resting point of the band. So just like a slingshot, the bands have to bounce back, right? It's an inevitability of physics. And this can actually be applied to the markets, and we'll see how it works in the markets in a second. All right, and in order to determine this slingshot effect, we're going to use a specific volatility study that contains bands, volatility bands, okay? And they'll tell us when price has moved too far from the mean or the average, which is the middle band, and is likely to reverse direction. So what we use is the Bollinger Bands, and the Bollinger Bands are a indicator that are available on virtually any retail trading platform. And there are a lot of ways to use these, and I'm going to show you one very unique way that I found works the best that involves the slingshot setup. But if you're not familiar with the Bollinger Bands, I'll give you a little background on those. Again, available on virtually any retail trading platform or charting platform. And when used correctly, they can help us pinpoint turning points in a security with astounding accuracy. So if you look at the middle of your screen here, I've got a chart on the screen, and I've got the Bollinger Bands plotted on the chart. And you'll notice here that price is hugging the lower Bollinger Band, okay? So we'll talk about kind of why it does this and what it means, but don't worry about that right now. I just want you to kind of see what's occurring, and that's that price is hugging the lower band and then trading down that lower band, okay? And so this is actually where we'd want to look at selling as price is touching that lower band. And then as there's a volatility expansion, we'll want to look at buying when other traders are panicking and fearful and getting in at a lower price as it rebounds back up to the band. Okay, so that's essentially what the slingshot is. And again, I'll show you in more detail how to identify it, trade it, and profit from it. But first, let's talk about a few ways that the Bollinger Bands can be used. These are some of the more common ways that they're used, and I'll show you which ones, kind of some of the strengths and weaknesses of each and which one works the best. So one of the common ways is to buy at the bottom band and sell at the top band. And this can be successful in certain market conditions, low volatility conditions, ranging markets, etc. But the problem is, as we just looked at in that previous chart, is that price can hug the upper or lower band for extended periods of time. So what ends up happening is when this basically method or technique of using the Bollinger Bands doesn't work, it ends up wiping out a lot of profitable trades. Okay, so for that reason, we don't use the buy at the bottom band, sell at the top band method. Another common way that the Bollinger Bands are used is with band contraction and expansion. And this is actually really good information because what it tells us is what the level of volatility in the market is. And it can be a good indicator of an impending big move in a security. But the problem with this approach is that we don't know in which direction the move occurs. So when the bands are very close together, that means we're in a low volatility environment. And as they expand, that means that volatility is increasing. We often don't know whether that's going to be to the upside or the downside. So for that reason, we don't use that approach. Another common method is buy or sell at the middle band. Now this can work very well in strong trending markets. But unfortunately, it fails in sideways ranging markets, and the majority of the time, markets are in somewhat of a range or channel. So for that reason, we don't use the buy or sell at the middle band approach. Now, the last approach is the slingshot setup that I've developed, which is a unique way to use the Bollinger Bands in a more accurate, consistent manner. So what we do is we wait for the lower band to break, and I'll explain what this means here in a minute. So basically, price will hug the lower band and ultimately rebound to where the breach initially occurred. And I found this to be the most reliable, accurate way of using the Bollinger Bands and trading them around volatile market conditions. Okay, so if you're not familiar with the Bollinger Bands, they are a technical indicator tool that are available on virtually any retail or charting platform. And what they do is they plot two standard deviations, one above and one below a simple moving average of a security's price. They've been around for a long time. John Bollinger developed them back in the 70s, I believe, to give traders a higher probability of properly identifying when an asset is oversold or overbought. So he really designed them as an overbought, oversold indicator. Now we're going to use them in a unique way, as I mentioned, and what I have developed as the Slingshot setup. And the reason that this is, I found this to be the best way to use the Bollinger Bands is, as we'll look at on some examples here in a minute, price can exceed or hug a band envelope for prolonged periods during strong trends or volatile market conditions. So what we do is we wait for the lower band to break, and then we wait for the buy signal. And then we exit when price returns to the breaking point. And this is essentially a Slingshot setup that allows us to use a contrarian approach and really do the opposite of what other traders and investors are doing when they're following their emotions. Okay, and this is really what causes panic or fear and greed in the markets, and what causes price to go up or down. So this setup really occurs with incredible accuracy. And if you go back all the way to the beginning of the markets, the major market indices have returned to the initial volatility breakout with 100% accuracy. And you can verify this for yourself on your charts. And this includes all 4 major market corrections of 2018. If you guys were trading a couple of years ago, you'll remember that was a choppy year in the markets. We had 4 major corrections, and it worked in every single one of those. It also worked in the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis. If you were trading over a decade ago, that's when the market lost more than half of its value. It also occurred in the 2000 dot-com bubble, even the recent Corona crash. Every black swan event, market correction, major crash, bear market, you name it, this setup has worked 100% of the time. So let's take a look at this on some charts. Again, this is a chart of the recent Corona crash in February and March. All right, so you'll notice that we're in a volatility contraction on the left side of the chart. The bands are very close together and they're horizontal. Okay, this is the beginning of the Slingshot setup. Now, we looked at one of the approaches that many traders who use the Bollinger Bands use, and that's to buy at the lower band. And that would have worked the previous time, and we could have gotten out of the top band and made a nice little profit. But if you'd used it here in the Corona crash, it could have resulted in major losses. So we're going to use a contrarian approach and look at exiting profitable trades when price hits the lower band of the Bollinger Bands. And this is the beginning of the Slingshot setup where the bands are beginning to get pulled back. There's the sell-off. So you'll notice that price is hugging that lower band. We then come in and buy when there's a volatility expansion and price is sold off, getting us in at a lower price when other traders are panicking and fearful. And then we wait for price to come back up. In other words, the bands to be released to where they initially were stretched back or that volatility expansion occurred. So this is what the Slingshot setup looks like with volatility, contraction, and expansion, and how we sell when other traders are greedy and buy when other traders are panicking and take advantage of the rebound of the market. And when I get asked, how is the market trading back up? And obviously I took this screenshot before we even reached, surpassed previous all-time highs from back in February. I get asked, how are we back up? So it's such high prices on the S&P. Well, this is how, because institutional investors, hedge funds, smart money know to get in and buy at bargain prices on panic selling, and this is what they do. And then they come in and take profits when price rebounds back to the initial resting point, and that's why you see trend stalls and sideways price action and corrections on these rebounds. And we just recently saw a 10% correction off all-time highs a few weeks ago. Okay, so this is why this occurs. Now I often get asked, does this work on individual securities? Absolutely, the same principles apply. This is a chart of Apple. All right, and you'll notice that we're in this nice uptrend on the left half of the chart. And people have that fear of missing out mentality. Their emotions are taking over. They're getting greedy. They don't want to miss out on future profits. We get a nice little retracement in the stock there in the middle of your chart. In fact, we even get some what some would consider a bullish reversal pattern on these two candles. A lot of people would be jumping in here right around 195, 196 in Apple, but this is the beginning of the slingshot. This is where we want to be taking profits and getting ready for a sell-off in the security, and then getting in on a rebound on the slingshot setup, looking to take profits right back to where the volatility expansion occurred. And oftentimes you'll notice, especially on this chart, we get even a further continuation in uptrend after the slingshot plays out. So a lot of times what I'll do is I'll start scaling out of positions here on that circle on the right side of the slingshot setup, right around where the volatility expansion began, and then I'll let the other half of the position ride for any future uptrend in the stock or the security that I'm trading. Let's look at another example. This is the QQQ Invesco QQQ NASDAQ ETF, and you'll notice that on the left side of the chart, the very left side, we've got another volatility contraction. The bands are close together and horizontal, and a lot of traders are going to be buying at this lower band, right? To try to take advantage of a rebound in the QQQ. But this is actually where we want to be taking profits on any existing positions and waiting for a sell-off to ensue where we can come in at buy at lower prices and take advantage of the rebound back up to the initial volatility breakout. So again, there's the slingshot setup, okay? I often get asked, does this work on, we've so far looked at daily charts, does this work on intraday charts if you're a day trader? Absolutely, right? This is all psychological, so it doesn't matter what time frame you're looking at. The same principles apply. All right, so if you were trading that method of buying at the bottom band and selling at the top band, you would have had a few nice trades there on the left side of your chart. Unfortunately, you would have wiped out a lot of profits if you use that approach on this particular point in time on a 5-minute chart when the AMD sold off, right? So look at that. There's the slingshot setup. Here's where we want to be looking to get in and take advantage of the rebound back up to the volatility breakout. So there's the slingshot setup. Now the key is, how do we identify the buy zone? Because the trick is to identify when the band is overextended and ready to snap back. And there's a lot of ways to do this. In fact, there's probably a dozen ways to get in on the band expansion and rebound. And we don't have time on our session today to get into all the nuances of those. But some of the ways that I use are, you can combine it with other indicators like the RSI to look for oversold conditions. You can use bullish reversal candles off the lower band. You can wait for price to trade back up into the band. Sometimes I'll wait for a couple closes above the lower band and then use a buy stop trigger to get in on the rebound. You can use a 2-bar high entry where you get back in on a close above the previous 2 highs. There's a lot of different little ways you can do this. But I'm going to give you an easier method to get in and identify the buy zone on the rebound. And it's something that I've spent more than 10 years and thousands of hours trying to determine when this momentum shift occurs and the new trend is starting. Or in other words, the bands of the slingshot have been pulled back as far as they can go, and price has got to rebound back up to the resting point. And once I got this formula dialed in, I then had to configure it to work on all time frames and duplicate the success across all markets. That was really the challenge. And so I had to do it in a way that it was adaptable, that could adapt to different time frames in different markets, whether it be Forex, futures, equities, ETFs. And it was a challenge, but ultimately I was able to accomplish it and develop a tool that provides accurate buy and sell signals near the outer channels of the Bollinger Bands. And the really cool thing is I was able to develop this tool to give a warning signal up to 3 candles in advance of the move. So the majority of the time, it's going to tell you up to 3 candles in advance before the move occurs versus having to wait for part of the move to occur to get into the move or to exit a profitable position. So when you develop the right combination of momentum indicators and then you combine those with volatility studies like the Bollinger Bands and price action setups, you can actually identify buy and sell signals at the outer bands with really a high degree of accuracy. And this is what I've developed into a signal software called TradeTrend. And TradeTrend allows you to accurately buy at the bottom of the slingshot without any guesswork using a proprietary blend of momentum indicators that not only can warn you of the sell-off at the start of the slingshot setup, but also the rebound near the bottom of the slingshot. And it can predict short-term and long-term trends with astounding accuracy. And again, I've developed this tool to work with virtually any security that you can trade, whether it's stocks, ETFs, futures, Forex, options. And you can also use it to screen for these opportunities on your charts in any time frame. And you can also go back and verify any market sellout, black swan event, market crash, you name it, you can use it and verify it yourself on your charts. And this is probably one of the best times to do that, because we're in very volatile market conditions with the pandemic that's going on and the upcoming presidential election. And this is really a crucial tool to have for volatile markets. And volatility is without a doubt going to be increasing as we approach the November election. We have a lot of members who use this to supercharge their option strategies, and ultimately it can help you trade like a pro without any guesswork by identifying these buy and sell entry zones with a high degree of accuracy. Now, I told you I'd give you a little trick to help eliminate a lot of your losing trades, and this can actually be used with virtually any strategy, but it's a technique that we've programmed into the trade trend algorithm. And it's a specific type of order that we use to get into most of our trades. And that's a buy stop or a sell stop order. And we do this to confirm momentum direction. So instead of getting in on a signal with a market or a limit order, instead we use a buy stop order. So we'll enter a long trade by placing a buy stop above the high of the signal candle, or a sell stop on a short trade below the low of the signal candle. And what this does is it helps confirm momentum direction and filter out false signals. And then ultimately it improves consistency and profitability of a signal system or an indicator. And I found it probably, eliminates somewhere in the neighborhood of 30 to 40% of your losing trades if you use this type of order to enter on a momentum confirmation versus just jumping in the market right then and there, okay? And this is really what sets Trade Trend apart, because again, most signal softwares out there, or most indicators that we'd use, require you to enter when you see the signal. And this is where Trade Trend is different. And I'll explain that here in more detail. So I often get asked, well, Jeff, how did you do using Trade Trend in the recent Corona crash? Because it was a very difficult market to navigate, right? Extreme volatility, actually the most extreme sell-off we've ever seen in the market in terms of severity, magnitude, and time. And I spotted that slingshot setup occurring back in February, so I became very cautious. I started unwinding positions, going to mostly cash, and waiting to see if price hugged the lower band and the slingshot and the bands of the slingshot pulled back. So I was pretty cautious in February, but I did okay. This is my real money statement for my TD Ameritrade account at the end of the month, and I did over $13,000 that month, just trading very small position sizes, being very cautious. But then as March approached and the Corona crash ensued, I became more aggressive because I saw that slingshot trade setting up, and I knew that with 100% accuracy, price would return back up to the breaking point of the band. And I became more aggressive with my positions, and I took a screenshot of my real money TD Ameritrade account at the end of March, and you'll see that I made over $27,000 that month, mostly on that rebound that we saw set in at the end of the month, and that was the slingshot setup. So all in all, in February, March, during the Corona crash, I made over $40,000 in real money profits, trading with Trade Trend combined with the slingshot setup. All right. So this is kind of what it looks like on your chart. You get that buy or sell warning signal, okay? So you get a green arrow for a buy warning and a red arrow for a sell warning. This is a chart of Bank of America with Trade Trend on the chart. And then you get a confirmation dot showing us that price hit our suggested entry, all right? And these are all signals on Bank of America using options. So buying at the money options, these consecutive signals resulted in nearly a 2,000% gain, turning every $2,000 invested on each trade into almost $55,000. Here's an example of Chipotle Mexican. There were 4 nice buy setups here on Chipotle, and you can see that we got a warning 2 to 3 days in advance before the trade actually triggered, with over 2,000% gains, turning every $2,000 invested without compounding in at over $51,000. So trade trend works in any market, any time frame, and any size account. You can apply it to anything, and it provides predictive buy and sell signals before the move occurs. So again, this is what sets it apart from other signal softwares or indicators on the market that give you a signal that require you to enter the trade when you get the signal. Instead, trade trend tells you up to 1 to 3 candles in advance your exact entry price and direction on any time frame and any security. So if you're looking at, let's say, Apple, and the algorithm identifies a potential momentum shift to the upside or uptrend in the stock, it will tell you, let's say you're trading off of a daily chart, 1 to 3 days in advance, what the entry price should be if the momentum follows through to the upside. Okay, so you simply enter your order with your broker and wait for it to get triggered. Okay, and again, that happens up to 3 candles in advance of the actual move. Okay, and trade trend has predicted every market crash and rebound in the history of the market with 100% accuracy. That's a bold statement, but when you see the trade trend signals for yourself, you can verify it. Go back all the way to the beginning of the market. Look at every black swan event, market crash, bear market. Trade trend has given us a sell warning before the market lost a significant amount of its value. Here's some examples. This is the flash crash of August 2015. You'll see that we're in a low volatility environment. Traders that were using that buy at the bottom band, sell at the top band, we're doing okay there for a few months. We were in a sideways ranging market with low volatility. The bands are close together and horizontal, but then the slingshot setup starts to take effect, and you'll see that trade trend gave us a sell signal right at the bottom of the band, and the market lost a significant amount of its value over the course of a week before rebounding, and trade trend gave us a nice buy signal at the bottom. This is another example going back over a decade to the 2008 mortgage crisis. All right, we've got a lot of FOMO, fear of missing out. There's been a big bubble in the housing market. The stock market is on fire. People are getting in when they should be fearful, right? During a bubble. Trade trend gives us the sell warning as the slingshot setup ensues and the market loses more than half of its value. We then get a nice buy signal from trade trend as the market's bottoming out before it rebounds back up into the 1350 level where it initially broke. This is going back now 20 years to the 2000.com bubble. Here's the sell signal from trade trend. There's the slingshot setup. Trade trend gives us a nice buy signal near the bottom before the market rebounds. So guys, virtually every system will produce winning trades. There's no doubt about that. But the problem is they don't keep you out of the market when conditions are not favorable. And you end up giving back your profits on the losing trades. But we've designed trade trend to keep you out of the market when the momentum is not in your favor and to get you in when there's the highest chance of a strong move in the security that you're trading. All right, and here's real money proof of that. These are more real money screenshots from my TD Ameritrade brokerage account, my Thinkorswim platform, using the trade trend signals in the futures market. And you can see that I was able to profit in the tune of $8,000, $6,500, $6,000, $5,400 in a single day, only trading one contract on each of these positions. And you'll see not every trade's a winner. We do have losing trades with trade trend, but trade trend and the algorithm behind it help keep losses contained. Okay, and you can see that my losses were contained on all of these losing trades, and the profitable trades were allowed to run, and I was able to lock in profits. So here's my promise to you guys. I want to help you have days just like these, and I'm going to give you access to a tool that lets you copy my trades. This is a one-time opportunity that we're extending to the InvestorExpos attendees this morning to join me to discover how I make consistent income in the markets day after day and week after week. Guys, I use this tool in my own personal trading account as well as my hedge fund. And what I'm going to do is I'm going to reveal every one of my special techniques and indicators that make profits like this possible. And I don't hold anything back. So here's everything you get with our trade trend signal package. You get 12 months of trade trend for stocks, futures, and Forex, whatever market you like to trade. You can also use it to trade to make options decisions. If you trade options, we have a lot of members who use the buy and sell signals to get into directional options trades or trade credit spreads, you name it. You get exact entry and exit signals as well as trailing stop levels. We also hold live interactive trade sessions where we we hold these in webinar form. So I conduct the sessions and I show you how I use the trade trend tool in my own personal trading. We hold those a few times a month and you get access to those. You also get members area access for replays and recorded training sessions. If you're not able to attend any of our live trade sessions, not to worry, we record every single session and post it in our members area. And if you decide to check out Trade Trend today, you'll get immediate access to our members area where you can see all of our previously recorded live trade sessions. I also give you full support and coaching on those trade sessions, as well as VIP email access if you ever have any questions about the market or the trade trend tool or anything trading related. We also teach you trade adjustments to fix losing trades. We have a lot of trade adjustments in our arsenal around different option strategies to help adjust losing trades and turn them into profitable trades. So you'll also get access to our training for that, as well as a list of my most profitable tickers to trade, which we share with you on each of our live sessions. So ultimately, we've set up a very special package to help you cut the learning curve and trade like a pro starting tomorrow. And this is our InvestorExpos Trader Special, where you get 12-month subscription of Trade Trend Signals, which is a $14.99 value. You get our live trade sessions, which is a $550 value. You get personal coaching on our live sessions and VIP email access to me, and I answer those directly, valued at $19.97. You get exclusive invitation-only Facebook group access to our 800 member group Facebook page that has other members who use the trade trend tool and all of our best options, futures, forex, and equity strategies, and you can share all of your best trades and struggles and successes with other members who are in the same boat as you. And we'll also teach you to adjust losing trades, right? So we have a whole course on trade adjustments that we're going to throw in for free. That's a $900 value. And ultimately you get to learn to trade stocks, futures, forex, and options with consistency. And then I'm going to throw in a couple bonuses. Bonus number one is how to win 97% of your options trades. This is an online course that we teach to consistently win options trades. And I share with you how I've been able to close over 97% winners over the last 5 years using one very specific strategy. And then bonus number two is my new ebook, How to Create Risk-Free Trades, valued at $97. We're going to throw that one in free for you as well in our Trade Trend Signal package. So the total value on this package is over $5,000, but we're taking 80% off for the InvestorExpos event today and asking only $997 for this package and everything you see on your screen today. So Anna will put the link in the box to join. We are going to open this up to the first 15 people. We will close it down after that. We do take very limited membership because I provide the support and coaching and mentorship to our new members, and I can only handle so many new members at one time. So this isn't a marketing gimmick. We truly do close this down after the 15 spots are filled. So if you want to claim one of the 15 seats, go to tradetrendlive.com and you will get access to everything that you see here on your screen. Now, I'll get to Q&A here in just a second if we have any extra time. One of the common questions that we get is, what are the available platforms for Trade Trend? Well, we have it on a lot of platforms. We have it on web-based charting platforms, Wealth Charts, and TradingView. You can also access it on the downloadable charting platform, Metastock. And if you want it on a broker platform and you trade with NinjaTrader, Thinkorswim, or TradeStation, you can also receive the Trade Trend indicator on any of those platforms. So again, when you sign up, you'll get access to everything you saw on your screen, as well as the ability to select which platform you want your trade trend signals on by going to tradetrendlive.com. All right, so here's a little of what our members are saying who have used Trade Trend. We're a little short on time, so I won't go through all of these, but I do want to highlight one that came from Brian, and he really was struggling in the market last year. He was down around $42,000 and then began using Trade Trend to trade the futures market, and he actually is now net positive over $47,000. He made over $90,000 in profits simply using Trade Trend in only 90 days. Guys, that's an average of $30,000 in profits per month using the tool. So you can see how quickly this can pay for itself when you use it. So again, go to tradetrendlive.com to claim one of the 15 seats that we're offering up today on the session. And of course, only one winning trade, as you can see, can pay for this package. Okay, so I want you guys to be prepared for the upcoming market volatility that we're going to see with the COVID pandemic and the upcoming presidential election. It's crucial that you have a tool like this on your side to navigate volatile market conditions. Okay, these are some of the most difficult market conditions I've seen in my career as a trader. And this can certainly help alleviate a lot of those. And I'm going to throw in a quick guarantee. If you don't make money in the first 90 days, I'm very confident that you can be successful with this. So I'm going to throw in an extra year of trade trend at absolutely no cost. So just simply send me an email, say, Jeff, I wasn't able to make money in the first 90 days, which I'm confident will not be the case because we've actually never had somebody send us this email or take advantage of this, but it is on the table. So simply shoot me an email and I'll throw in another year of trade trend at no cost to you. Okay, that's a $1,499 value out of our own pockets. All right, so that's how confident I am in this. TradeTrendLive.com. I'll try to take a couple quick questions here. If I don't get to any questions, again, because we're almost out of time, shoot us an email, support@altostrading.com, and I'd be happy to answer those via email. Again, TradeTrendLive.com to get everything you see here on your screen. Okay, Andrew's asking, how much do you need to start? Andrew, you can really start with as much as you want. We have traders that are just getting started with only a couple $1,000. It all depends on your risk tolerance and position sizing. So TradeTrend will give you the signals and you can make the decision on how much you want to trade. We always coach our members to trade small. Start out small, grow your account, and then you can scale up your position sizing. Okay, so VB members asking, how do you know which of the 3 points to take a trade from? That's what TradeTrend will help you determine. So you can short the market at the beginning of the slingshot on a sell signal from TradeTrend. You can buy near the bottom on a buy signal, and then you can exit on that rebound back up to the volatility breakout. Okay, does this product deal only on speculation? So there's an algorithm built into TradeTrend that is constantly running numbers to determine the most likely momentum direction. And it also gauges the strength of the momentum once the trade is entered. So it's not speculation, it's actually based on algorithmic math. Okay, so I did the best to answer a few questions in there, but I'm a little bit over time, so I'm gonna pass it back to Anna. I apologize if I didn't get to any questions. Feel free to shoot us an email, support@altostrading.com. Thanks again for having me, Anna, TradeTrendLive.com to join. And we've got a few seats left. Welcome to everybody so far who's joined. I look forward to working with you.
Hey everyone, my name is Joshua Martinez. I appreciate the opportunity to work with you. I appreciate your time. And I also want to say thank you so much to InvestorExpos for giving us the ability to be on here as well. Before we get started, if you could, go ahead and type in a yes into the question section box, just confirming that you can hear my voice and that the screen in front of you just says you are about to discover. This would really help me with confirming that everything's working properly on my side as well as everything's working properly on your side. Hey trader, hey Donna, hey active trader, appreciate the confirmation. Hey Norman, hey Joe, appreciate it, John and Jeff and Rodriguez. Okay, so we have about 45 minutes with each other, so we're going to try to get right into the live market as fast as possible and do a strategy demonstration. In front of you is the risk disclaimer. It just means there's risk involved. You should never invest money you cannot afford to lose. Always keep risk management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. And what that basically means is what I'm going to share with you is research. Ultimately, what you do with this information is completely up to you. We are not CTAs, which stands for Commodity Trading Advisors, which means we are not here to dictate your trades or customize investment advice. Furthermore, we are not money managers, so we will never ask you to give us money to trade on your behalf. So once again, what we're going to share with you is research. What you do with this information is up to you. Now, we're going to talk about a pattern inside of the futures market called the Golden Cross, or we call it the Golden Cross. And basically, inside the futures market, something pretty unique takes place with the price fluctuation. The market tends to gravitate towards the average price of the day. And according to our research, we've seen it happen up to 97.5%, which means over 100 trading days, 97.5 of those trading days, the market tends to gravitate towards the average price of the future contract that we're monitoring. What we do is we utilize a tunnel trader, which tracks that average price movement and also gives us some visual guidelines of when we could enter in and how to protect ourselves. So in a few moments, we're going to get into the live market, and you're going to see 4 lines. A blue line, which is the Golden Cross, which we use that to exit. 2 green lines, which we use to enter into the market. And then we have a red line, which we use to protect ourselves. Now, Before we jump into the live market, let me just do a quick introduction. My name is Joshua Martinez, and I'm an 11-plus year trading veteran. I'm the founder of Traders Agency, creator of the Tunnel Trading Strategy, published author, international speaker, professional analyst, and I've trained tens of thousands of people from all around the world. I am a full-time trader myself, and I trade with my own money. When I lose a trade, I lose my own money. And when I win a trade, I make money for myself and for my family. And what I do is I will host presentations like this and just kind of share with people and say, hey, this is what's working for me and this is what's not working for me. I will also write articles, ebooks, publications, and stuff like that. And some of my information has been published in Your Trading Edge, FX Trader Magazine, Equities.com, Executive Trader, as well as TraderPlan.com. So let's go ahead and jump right into the market, and let's get started. So you should see in front of you the live chart. This is what's called the E-mini Russell 2000. And the E-mini Russell 2000, this is on the 5-minute time frame, and this is the futures market. On the right-hand side, you're going to see the price. On the bottom, you're going to see time and date. And then those little candlesticks, they're known as Japanese candlesticks, and they measure price movement over time. We're looking at a 5-minute time frame, which means each of those candlesticks represents 5 minutes of trading. You can customize these. You can look at 1-hour time frames, daily time frames, monthly time frames, but we like to look at the 5-minute time frames. And what you're going to notice is you're going to notice these 4 lines. Now, the blue line, the 2 green lines, and the red line. So that blue line, that represents the average price of the day. So what it's doing is there's a calculation taking place and it's monitoring price fluctuation over time. And one of the things that we see is that it doesn't matter how high the candlesticks are or how low the candlesticks are, you notice how the market is continuously gravitating towards this blue line. Now, what I want to do is share with you what the market has done today and how often the market has touched this blue line. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So today alone, or this one official trading day thus far, the market has gravitated towards the blue line right around 10 separate occasions. Now, why is that important to notate? Well, when it comes to trading, whether you use a system, a strategy, an indicator, whether you use fundamentals, economics, or whatever, what you're really wanting to do is you're wanting to try to find a sequence of events, and you're trying to find a pattern. You're trying to find a habit, something that happens over and over and over again inside the market. Type in a yes, why yes, that makes a little bit of sense. So when it comes to trading, you have to have a sequence of events which helps you forward predict what the market may do based upon past history. And that blue line is the pattern. Now, when we take a look at the previous day, and whenever you see the lines come together and expand, that's when one day is over and a new day begins. Now, if we take a look at yesterday, you will notice how often the market touched the blue line on this particular day. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, excuse me. So 1, 2, 3, 4, 5, 6 times yesterday, and then the previous day, and so on and so forth. Now, one of the things which I want to point out is when we bring in additional days or additional weeks or additional months, notice how often the market is touching this blue line over and over and over again. Do me a favor, type in a yes into the question section box if you can visually see. It doesn't matter how high the market is or how low the market is continuously gravitating towards the blue line. And thank you, Joe. Thank you, Peter, for the confirmation. Thank you, Caroline and John, for the confirmation. Perry. So let's just think about this for a moment, and let's just kind of ask the question, which is, well, if this market continuously touches the blue line over and over and over again, and that's the pattern, why don't we just simply create a trading plan or entry plan to trade towards the blue line? And that's what this tunnel trader does. So you're going to notice that we have 2 green levels and then we have a red level. So the two green levels we use to help us determine when the market is visually, or when the market is considered oversold. So whenever the market begins to drift away from the blue line, we're going to be looking to enter into the market buying at a lower price. And then we're going to look to place our stops at the red line. So let me show you what I mean. So when the candlestick touches the green level, the goal would be to say, okay, well, you know, the market is below the blue line. It's considered oversold. And then we're going to look to enter into the market buying. We call this a market buy. Now, trader says, how are these lines generated? So what this is a mathematical equation which monitors the average price movement of the day. So it's calculating price over time and giving us the average price. And then what these green levels are, these are deviations of the blue line, and the red level is a deviation of the blue line as well. And what we've ran is, statistically speaking, which we'll show you in the back testing as well, is that when we enter in the market buying on the green level, we tend to give enough opportunity on the way up. So let me show you what I mean. So whenever the candlestick closes on the green level, we'll enter in with our desired contract size. And then when or if the market touches the red level, we will close the trade with a loss. So we're going to place our stop at whatever the price point is of the red line. Now this is referred to as a fixed stop. So this is an entry and this is a fixed stop, which means that the stop never moves. Now, if the market touches the blue line, we will close out with a win. If the market touches the red line, we close out with a loss. Let's see what happens. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. Within 50 minutes, the market moves from the green level to the blue level, and that is 63 ticks. So we close the trade. And inside the futures market, we measure price movement known as ticks, T-I-C-K. And what that means is if you're a stock trader, you are probably used to monitoring price movement and fluctuations of pennies. You know, 1 penny, 2 penny, 3 pennies, etc. Inside of the futures market, because we're buying and selling contracts, the symbols will move in increments. So in this symbol, the E-mini Russell 2000, this will move in increments of 10 cents at a time. So it'll go 10 cents, 20 cents, 30 cents, 40 cents, etc. So the market from the entry to the exit, if this was a total of $6.30 worth of movement, that's 63 10-cents worth of movement, otherwise known as 63 ticks. Now, if I bring up my calculator, every tick is valued at $5. So 63 times it by 5 is 315 US dollars. Now, some of you are relatively new, and you probably have never traded before, but you're watching this session and you're trying to look for tips, tricks, nuggets, and some sort of structure. You're trying to find a strategy that may be easy to obey and something that you think you could do. Well, I'm a big believer on focusing in on the end goal in mind. And when it comes to trading, that's going to be performance. And nobody can guarantee results. I can't guarantee results. But let me just ask the question regarding happiness. Type in a me, M-E, into the question section box if you'd be relatively happy if you entered into a trade with controlled risk, and within about an hour, you made 315 US dollars. The investment size is about $500. So it's a $500 average investment. You have controlled risk. Within about an hour, you make 315 US dollars in return. So Joe says me, Rodriguez says me, Caroline says me, Peter says me, Active Trader says me, Matthew says me. Good. Now, success is a formula, it's not a fantasy, so it's very important that we are able to duplicate our successes, and we are in a position of being able to repeat this, because success is over time. Excuse me, success is over time, it's not one time. And what I mean by that is, just because you make $300 one time doesn't mean you're successful. You have to be able to duplicate it. And so what we're going to do is we're going to wait for the market to touch the green level again. And all that means is the market is low enough below the blue line to give us confidence that there's enough of a buying opportunity. Now, what are we doing here? Well, there's what's called the golden cross, which is this blue line, and this is measuring the average price movement of the day. And this, according to our research, the market hits the blue line up to 97.5% of the time daily, and it rarely happens just one time. We've seen it happen up to 37 times in a single day. And all we're really doing is waiting for the market to get below the blue line so we can buy it. So when the market touches the green level and the candlestick closes, we want to buy the market. Notice how we're repeating the same process. We're not changing the rules. We're doing the same exact thing. So this is what's called the market buy. We're then going to place a stop at the red line. So we enter into the market, we place our stop at the red line, and then we're going to close out at the blue line. Or if the market touches the red line, let's see what happens. 5, 10, 15, 20, 25. 25 minutes later, the market has the golden cross, which means it touches the blue line, and the pattern is complete. The market could go much higher, but we're going to close out at the blue line because that's the predictable pattern. So 57 ticks. From entry to exit, 57 ticks. That's equivalent to 57 times it by 5, $285 US. Now, I know I've only showed you a couple examples, but trading should be designed to be relatively straightforward. We don't like strategies that are overly complicated and require a tremendous amount of time to locate opportunities. Because in trading, if you really think about it, the market can only go up and it can only go down. So if you were to close your eyes and you were to put a blindfold on and you were to flip a coin, you got a 50% chance of being right and a 50% chance of being wrong if you just guess the direction. All we're doing here is utilizing a pattern that's been proven to repeat itself to give us the opportunity to be right more than half the time. And if we can do this, then we should be able to win more than we lose and keep more than we lose. So therefore, we make money over time, not one time. Tim says, is the blue line a simple moving average? No, it's not a simple moving average. I wish it was, but what it's doing is it's running a calculation, and it's measuring the average price of the day. So let me ask this question. Type in ME, if you think these rules are relatively straightforward, and this is something that you think you could probably do. You wait for the market to touch the green level, and then you buy it, you close out the blue level. You let it touch the green level, you buy it, you let it close at the blue level. Okay, so let's do a test. And what the test means is I'm going to go candlestick by candlestick, and then all you really need to do is type in buy, B-U-Y, into the question section box if you can see the chart touch the green level. Adrian, we'll show this to you on multiple symbols. Absolutely, but we want to make sure that everyone understands how this works first. Okay, so we're just going to go candlestick by candlestick. Now, you do not need to be in front of your computer. You can receive text messages, you can receive pop-up alerts, you can receive notifications. But type in buy, B-U-Y, into the question section box if you think it's time to buy the market because we touched the green level. Yeah, so Joe says buy, Moses says buy, Petre says buy, Pierre says buy. Okay, so it's time to buy the market because we closed the candles, we touched the green level. Candlestick closes, market, buy. We then place our stop at the red level. And what I want you to do is I want you to type in close, C-L-O-S-E, when or if the market can touch the top blue level or the bottom red level. Let's see what happens. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. 1 hour into the trade. 5. So an hour and 5 minutes later, the market touches the blue line. Time to close the trade. So if you typed in buy on the green level, and then you typed in close on the blue level, you're absolutely correct. And that is 103 ticks of market movement that you would have captured, and 103 ticks times this by $5 is 515 US dollars. So let's keep going. We're going to go a little bit quicker this time, because we only have so much time together. But let's just make sure that you thoroughly understand how this works. Now, again, you can receive text messages, you can receive emails, you can receive pop alerts, you can receive notifications. And this is what we're doing. We're just taking advantage of the golden cross, and we're just simply waiting for the market to touch the green level. Now, whenever you see the lines come together, that means the day is over and a new day is starting. So we're just going to wait until the market touches the green level again. We're going to buy the market, place our stops at the red line, and then close at the blue line. If you have any questions, go ahead and type them to the question section box, and I'll do my very best to answer as many questions as I can along the way. And I'll just show you how this works, so this way you thoroughly understand the process. So that's 55 US dollars. Donna says, what confirms the second green entry rather than the first? So we have different variations of the entry strategy. Oftentimes the market does touch the first green line, and it will not touch the second green line. But throughout the month, about 11 times on average, from what I've seen, the market will touch the second green line. And it doesn't happen very often, but when it does, those are very, very high winning percent trades. And so when or if we see them, we treat them, you know, we're very intentional about entering in on the second green line if we see them. So not everybody wants to trade this many times a day, which is fine. Some people just go after the second green level. So 26 times it by 5 is 130 US dollars in this one. Trader says, do you have the win percentage ES? Yes, we're going to show you. We'll run the back test, and we'll show you on the NASDAQ, we'll show you the E-mini Russell, and we'll show you S&P 500. On the S&P, it's currently just over 70%. Now, the goal of this strategy is not to win 100% of the trades, and you're never going to hear me say it's going to win 100% of the trades. The goal is we're going to enter in on the market when it closes, and then we're going to exit when it touches the blue line, 31 ticks. So this one is 31 ticks, and that is 155 US dollars. So the expectation, we can't guarantee results, but then again, nobody can, but the goal is to win 7 out of 10 trades. So for every 10 trades we place utilizing this strategy, we should expect to lose at least 3 out of 10, and we should anticipate to win at least 7 out of 10. Active Trader says, can a tunnel trader strategy work for other assets? It's designed for all future symbols. We have not tested this on other markets. So we have not tested this on like stocks or options or Forex. We don't have any data to say it will or will not work on those. But we do have the data and the research for futures to say it's designed for all future symbols. 25 times by 5 is 125 US dollars. Donna says no shorts. We do have a selling strategy, which you can do, but the challenge is we predominantly monitor the E-mini Russell, the NASDAQ. We also monitor the S&P 500, and those are indices. And the stock market predominantly increases year over year on average. And so we don't really focus in on selling too much. We focus on buying. Now, if you were to look at like light crude oil, or if you were to look at you know, any FX futures, then yes, you utilize a short strategy. So here's the entry, here's the exit. That's 42 ticks. Let me ask this question: Am I following a process? Type in a yes if you can see that I'm doing the same exact thing over and over and over again. I'm not changing the rules. I'm just literally following a process, repeating a formula, because at the end of the day, success is a formula. It's not a fantasy. And we're just taking advantage of the golden cross. Now, what we're going to do, which I'm going to share with you right now, and we only have about 10 minutes left with each other, is we automated these rules. Now with NinjaTrader 8, which is a charting software, it is a very popular charting software for future traders. we automated this entire process. And so I'm going to show you what the results have been. And I'm going to share with you because we don't leave it on 24 hours. It's not a good idea to use any sort, in my opinion, it's not a good idea to use any sort of automation for 24 hours. You really should be monitoring the trend. And whenever the daily timer is at a low price heading up, you should start utilizing this strategy. So here is the tunnel. You have all the control of how this works. You can pick and choose what days of the weeks you want to trade. You can pick and choose the time you want to enter in, the time you want to pass on trades, and the time you want all your positions closed. Inside the futures market, last year, the CME came out with a brand new way of trading called micro E-mini contracts, and which basically means that you can now invest 1/10 a normal E-mini contract. So you can trade micro E-minis, which are like $50 investments during the day. We do not have a pattern day trading rule, which means you do not need to have $25,000 in your account to day trade in the futures market. Some brokers will let you open up with as little as $400. We're going to enter in when the market touches the green level, but you can automate other entry strategies, which we'll teach you how to do. We'll show you on the E-mini Russell. We'll show you leading up to September. We're getting ready to turn this on. Most of the month of September was a bearish reaction, and we believe the market's getting ready to increase leading up to the presidential election based upon our research. And so we're getting ready to turn these right back on. But let me go ahead and show you the statistics so you have an idea of what this is doing. Now, these are back-tested results, which basically means if you were to utilize these strategies, these are what the results would be. On the E-mini Russell, RTY, $6,885. It's winning 70.67% of the trades. It won 10 trades in a row before it had a loss. It lost 3 trades in a row before it had a win. Averages $3,281 a month. It is generating success over time. It does not win all the trades. And let me go ahead and show you what it's doing. And this is completely automatic. So this is referred to as a self-directed auto strategy. You have to direct it, but at the end of the day, it's following the process. When the market touches the green level, it enters into the market buying, touches the blue level, it exits. When the market comes down, if it comes down, let's see if I show you another example. Touches the green level, enters you in buying automatically. Touches the blue level, close out. This strategy is designed for the 5-minute time frame, not for the 1-minute time frame. Some people use it on a 1-minute time frame, but we don't teach it. Okay, let me show you the NASDAQ NQ. So on the NASDAQ, it shows 17,080 US dollars. It's winning 64.10% of the trades. It had 9 winning trades in a row before it lost. It had 4 losing trades in a row before it won. It is averaging $8,139.69 per month. Let's show you the ES, the S&P 500. On the S&P 500, $12,537.50. It's winning 70.89% of the trades. It's averaging $5,974.90 a month. And it's making money over time. Now, if we calculate this, $6,885 on the E-mini Russell, $17,080 on NASDAQ, $12,537.50 on the S&P, this is 6,885 plus 17,080 plus 12,537.50. That's $36,502.50 in 2 calendar months. Let me ask this question. Some of you are brand new. You've never traded before. And I understand that. But this can be learned. It will take some work to learn, but it can be learned. Type in a ME, M-E, into the question section box if you'd be pretty happy taking an average investment of $500 per trade and making over $30,000 US within 2 calendar months. Having one trade at a time per symbol, and you're only monitoring 3 symbols. You're not monitoring 5, you're not monitoring 20, you're monitoring 3. Now, what I want to do is I want to share with you our Google reviews. If we go to Traders Agency Reviews as a company in our service, we are a 4.9 out of 5-star review. You begin to see testimonials. Brenda says, I have been very impressed with Josh's style of teaching. He explains it so well for a beginner trader to concept. 5-star review 15 hours ago. Joseph, 19 hours ago, 5-star review. Justin says, Josh is a great teacher and has a way of explaining the markets in the manner that makes investing and the market look simple. 5-star review. George, 5-star review. I'm surprised with Josh as he is right on with Traders Agency. Thank you. Jermaine, very, very glad to have someone like Josh, 5-star review. PRE, 5-star review. Jason, 5-star review. And you'll begin to see the testimonials. Why do we have happy students? Well, a lot of it's because our strategies are relatively straightforward, right to the point. And I think at the end of the day, if you had an opportunity to generate $36,502.50 within 2 calendar months, I think you'd be pretty happy too. Okay. Now, here's my question. Type in a yes, why yes, into the question section box if you'd like for me to share with you how you could get involved and utilize this strategy. Okay. So David says yes, Bill says yes, Perry says yes, Active Trader says yes. I'm going to walk you through everything you're getting. I have 13 minutes remaining. I apologize. I have 13 minutes remaining. And so I'm going to share with you what our promotion is. And then you can make the decision if you want to sign up or not. And I can also answer your questions after I share with you how this works. Now, you can receive text messages, emails, pop-up alerts, notifications if you have TradingView charts. We cannot guarantee results, but then again, nobody can. But we want to share with you some back-tested results from the strategies that we teach. And this is from July of 2019 until July of 2020. That's $13,040 US on the E-mini Dow Jones, only taking buys from 8 p.m. to 3 p.m. Eastern Time, which are intraday hours, small investments. $37,790 US on the NASDAQ, $15,662 US and 50 cents on the S&P 500, $16,910 US on the E-mini Russell 2000 from March to July, $21,820 US on light crude oil, $7,610 US on the Australian dollar futures. This is what's called a tunnel trading course. It is a trading strategy designed to achieve consistent returns. It's designed for all future symbols, user-friendly, simple, out-of-the-box ready, works on TradingView, works on NinjaTrader, and works on TradeStation. Here's what you get when you sign up. You get access to the Kickstart class. That's going to be on Tuesday at 4 p.m. Eastern Time. And yes, you get the recording of that as well. You get the self-directed auto strategy that can automatically enter you in, automatically place your stops, automatically place your limits. You have 4 high-power tunnel trading strategies, 2 for buying, 2 for selling. You have a Tunnel Trader On-Demand Archive Learning Series. If you've never traded futures before, we have a great foundation video series, about 11 videos long, 10 minutes long each. Go through 2 a day. Within a week, you're brought up to speed. The Tunnel Trader sessions recorded, available in your online education. 6 tunnel trading checklists, step-by-step instructions on what to do first, what to do second, what to do third. Tunnel Trader online learning portal. So once you sign up, we send you a username and a passcode to your online education. Think of it as your online university. You get access to our fully dedicated customer support team. You can reach them by email or by telephone number. We are available Monday through Friday from 9 a.m. Eastern Time to 5 p.m. Eastern Time. This is what's called the Tunnel Trading course. It's a 4-hour class, VIP access to the Tunnel Trader system, 4 strategies, 6 checklists, on-demand archive learning series, online education portal, recording of the Kickstart class, Tunnel Trader support link. Total value is $19,997 US. That's just the value. That's not the cost. we're actually ending our promotion, our end of the quarter promotion. We extended it for the Investor Expo, but it does end after this session. We're on our third 0 to 50,000 US dollar trading challenge for the year, and we believe there's going to be about a 15,000 US dollar buying opportunity from now to the end of October on the NASDAQ, which we're monitoring as a catalyst to use for the tunnel trader. So our end of the quarter promotion ends today. We actually ended it yesterday, but we did extend it just for this presentation because it was the day after the end of the quarter. Traditionally, the cost of this program, it's an annual subscription. So it's $3,495 US dollars for 12 months access. And then at the end of the 12 months is another $3,495. $34.95 is a lot of money because it is a lot of money. But when you view it based upon investment return on the investment, in 2 calendar months, you could have made over 30,000 US dollars. Most people will be pretty happy with the return on the investment. What we normally do is provide what's called a new member promotion. So your first 12 months will be $14.97. What we're doing right now, which ends right after this presentation, is we're eliminating the subscription model, and we're going to give an unlimited access for one-time simple easy payment of $14.97. That's unlimited access to your classes, to your strategies, to your indicators, to your checklists, your customer support team, unlimited access for the life of the program. It will be a first come, first serve. You can go to gettunneltrader.com to enroll. We will back this up with a 60-day, 100%, no questions asked, money back guarantee. For those of you that would like to enroll into the program, here's what you can do right now. Type in to the question section box, link, L-I-N-K, with your telephone number in the question section box. You can also give my team a call at 1-888-483-5161. But once again, you go to gettunneltrader.com. Okay, so let me go ahead and send this link to those who just expressed interest. Here you go, Peter. I see you for link and have your telephone number. Chance, here you go. I have you for link. Here's your telephone number. Active Trader, I have you for link. It's actually pretty straightforward to fill it out. You go to gettunneltrader.com. First name, last name, email address, phone number. You can get started with American Express, MasterCard, Discover, Visa. Name on credit card number, expiration date, CVV code, complete your purchase, and you are done. One-time simple easy payment of $14.97. Here you go, member TC. I just sent you the link in the question section box. There you go, Trader, there you go. Donna, here's your link, no problem. Once you enroll in the program, we'll send you a welcome email, username and a passcode. And for those of you who are signing up today, we do have one more item that we will be giving you, no additional charge. When you enroll into the program, we're going to give you 3 months of our live trading sessions. Now, this is what's called a Futures Edge. And the Futures Edge, Monday, Tuesday, and Wednesday, from 9 a.m. Eastern Time to 11 a.m. Eastern Time, myself and my team, we go into the live market. We pick the symbols. We give the direction. We give you the entry, the stops, and the limits. And we utilize the Tunnel Trader, and we have everything written out. So written descriptions, trade idea trackers, summary videos. You get a link to the actual charts, which is very nice. And everything is recorded so you can watch it as many times as you want. There you go, Freeman. Here's your link, my friend, in the question section box. Terrence, here's your link. You go ahead and click on it. I do have a few minutes left, and so let's just do questions. If you are signing up online, do me a favor. Just say, hey, I just signed up or I'm enrolled. What that will do is I have my education specialist watching this presentation. They're going to grab your name, and they're going to send you your bonuses. You can also call our team at 1-888-483-5161. You can go to gettunneltrader.com, or you can type in your telephone number. We'll be happy to contact you. Okay, so we do have about 5 minutes remaining, so if you have any questions, go ahead and type into the question section box, and I'll be very happy to answer any questions you may have. David says, do you have any testimonials? Yes. Other than the Google reviews, which you can go to Google right now and just type in Traders Agency reviews, we do have some student testimonials that we did grab so that you can see what people are saying. So Jack says, hey Josh, thanks for the day. Just made $3,100 in a single trade. You are the best. I'd recommend you to anybody. says 1,100 US dollars today. Thank you for all your help. Helena says, this is the best education company I spent money on, period. They are using a real strategy. Josh explains everything in detail in the live class. There is no way you will not make money if you follow his rules and strategies. That's not me saying it, that's the testimonial. We can't guarantee results. So finally, I found someone who is passionate about sharing their knowledge and teaching others and making money together as students. I highly recommend all of his classes and his strategies. Rouse says, this stuff works, follow the rules and you will make money. Again, that's the testimonial. I cannot guarantee results. I have almost doubled my account in just 2 months. This person says made $500 last night, $9,000 last week, $5,000 last week, $500, doubled my trading account, $250, $3,000, $980, $360, $455. Go to gettunneltrader.com. Gettunneltrader.com. Donna says auto setup to run is on NinjaTrader. Needs how much? Great question. So this is not a set and forget style of trading. And what I mean by that is we are not, this is not a 401k. This is not a mutual fund. So don't enroll if you think that you're just going to put money in and then it's just going to grow. That's not what this is. This is not this is not money management. On NinjaTrader 8, what it's designed for is you wake up in the morning, you turn on your computer, you look at your chart and you go, hey, I believe the market's going to go in this direction for the day. It's going to go up, it's going to go down. You then set your parameters, and then you turn on the self-directed auto strategy to take advantage of the direction you believe the market's going in. You can leave the house as long as your computer's on. You can go do your other things, and when you come back, you can take over, or you can let the self-directed automation continue to do its thing. Let's say you're getting ready to go to bed. Before you do, you think the market's going to move a certain direction while you're sleeping. You can turn on your self-directed auto strategy to take advantage of the market movement while you're sleeping. And if you're right, it makes money. If you're wrong, it loses money. The goal is to win 7 out of 10 trades. We expect to lose 3 out of 10 trades, but it is proven to make money over time. Caroline says, is there any, I have about 1 more minute left. No, Trader says, do you have any live results? Yeah, we have. Let me go ahead and show you what the students are saying. So here are trading count snapshots. This comes from Lee. Says, hey Josh, I've been trading stocks and stock options for over 30 years, and below is at least triple the profit I've ever made in the same time period before trading futures using Destination and Tunnel. Destination, another strategy that we teach, but we close the enrollment. It says, thank you for your mentoring today and teaching. $12,083.50. It appears to be their live account. This student reports and says, today I made over 10,000 US dollars this week, which is a huge milestone for me. So once again, go to gettunneltrader.com. I have like 40 seconds left. Lee says made $1,240. Elizabeth says made $600 yesterday, $300 today with micros. Those are $50 investments. You have Pete made $700 with micros and calling it a day. That's $50 investments, made $700. Michael says $475. Keith says $425, and all we're doing is taking advantage of the golden cross. Market touches the green level, we buy. Goes to blue level, 250, 250, 230, 750. So that's over 700 US dollars in this particular example within one single day, one trade at a time. 150, 175, 212.50. That's over 500 US dollars in a single day, following a sequence. Okay, everyone. I want to say thank you so much for the opportunity. Appreciate the chance to work with you. For those of you who are signing up, we're sending you a welcome email right now with your username and passcode, plus your bonuses. You can go to gettunneltrader.com to sign up. You can call our team at 1-888-483-5161, or you can type in your telephone number. We'll be happy to contact you as well. And I appreciate the chance to work with you. You have an incredible lineup of very, very healthy, very, very successful traders here, who are very happy to teach teach to you their experiences of what works for them and what doesn't work for them. So I highly suggest you take notes, and I'll go ahead and pass it back to Anna. So thank you so much, Anna. I appreciate the opportunity.
All right, well, fantastic. Hey, we've got quite a few people here today. That's wonderful. All right, so I got 45 minutes, and I'm just here today to give all of you pure teaching, pure tutorial. I kind of did drop the ball in one way, unfortunately, and I feel kind of bad about it, but I didn't bring anything to sell. So I apologize for that, and I know that I know you guys are going to be really upset about that because I don't have, even at the end of the presentation, I have nothing to sell. I have something I can give you for free. I'll give you one of my free courses, one of my mini courses for free, but put your wallets away, put your purse in the safe. I literally have nothing to sell today. So in that way, I kind of dropped the ball. But I've got some good information for you about Fibonacci trading. And for some of you, this will be a little bit of review at the beginning, but I am going to go through a wide gamut of Fibonacci techniques. So even if you're familiar with simple things like Fibonacci retracements, I'm going to give you some advanced stuff as well. So we're going to start with the beginning, go to the intermediate and advanced, all in 45 minutes. So if at the beginning it seems a little basic to you, hang in there, and I'll get to some stuff that you may not have seen before. So, okay, my slide's not moving. Let me try this. Wasn't activated. So a couple of quick questions or quick comments here. Because I have such a short period of time and I want to respect the schedule, I'm not going to be answering questions until the end. I'll try to leave some time at the end to answer your questions. So if any questions come up, feel free to write them down, or you can put them in the questions box. That's fine. I just want to know that I'm not ignoring your questions if I don't answer it right away. I'm just trying to stick to the schedule, and I will answer your questions at the end. Please do not trade with money you can't afford to lose. All the information in this presentation is for educational purposes only. Trading is always risky. We never eliminate the risk in trading. Most people don't make any money trading. Just that's the fact. And successful trading is a profession. So, you know, if you've got a get rich quick mindset, I actually recommend that you don't trade, because this is not a get rich quick game. This is a very, very serious business. There is a lot of money that is made, but by a minority of people. And so the people who do make the big money, they've learned over time, have taken it very seriously, and well, that's your competition. So you need to have the same type of mindset that professional traders do. A little bit about me. I'm Barry Burns, owner of Top Dog Trading. I wrote the book Trend Trading for Dummies. I've received Reader's Choice Awards from Technical Analysis of Stocks and Commodities magazine. I've helped others with writing their books. And I work with big companies like NinjaTrader, CME Group, eSignal, Metastock, Eurex Exchange, and many, many others. So I'm not going to spend a lot of time here with my bio. Okay, so let's get to the core teaching. So just to begin with getting everybody on board, no matter what level you are, we'll start with Fibonacci retracements, because that is what is most commonly used when we think of Fibonacci. So, and we're going to back up a little bit, but first I just want to give you the big concept here so that you'll understand. So when there's a big swing in the markets, we have a big swing up here, a pivot level or a swing high, and then you got a pivot level or big swing low down here. The main concept that most people use for drawing Fibonacci is they will take their Fibonacci drawing tool, click on this high, pull it down here, click on that low, and what it does is it will draw horizontal lines on your charts. And it has these percentages, 23.6, 38.2, 50, and so on. And the idea is to say, okay, after we come down here, and if we're looking for the trend, in this case, a downtrend to continue, then how long do we expect it to continue? In other words, how far will it retrace? And where should we then enter to go short to follow through on that downtrend. And that's how Fibonacci level retraces are used. So these are the ratios or the percentages. So literally, when it goes to this line, it has retraced 50% from that high to that low. Now, next question is, well, why do they use these percentages for the retrace? So let me share with you where these numbers come from a little bit. So they are a sequence of numbers named after Leonardo of Pisa, who is also known as Fibonacci, which means son of Pinocchio. And he introduced the sequence to the West he wasn't a trader, he was a mathematician. And so he introduced this sequence in 1202, but like a lot of things, that was the West. And it actually was a sequence independently discovered by mathematicians in India long before that. And if you think about it, well, that adds extra validity to the sequence because it was independently discovered at two different times in history in two different parts of the world. So what are these numbers? Well, they're a sequence of numbers beginning with a 0 and 1, and then each subsequent number is the sum of the previous two. So this is the math of it. So the header up here actually has the sequence. And so you'll see 1, 1, 2, 3, 5, 8, 13, 21, 34. So how do we arrive at these? Well, so we start at the beginning. 0 plus 1 is 1. So that's your first number in the sequence. And then what we do is we take the 1 and the 1, the last two numbers of this equation, we add them together and we get 2. So the first number in the sequence is 1. The second number in the sequence is 2. Pretty simple. Guess what the third number is? 3. Okay, so kindergarten math, right? And then, but where this comes from is you take the 1 and the 2 from here, add them together, and you get 3. And then it gets a little different. So that all seems pretty darn easy, and it is, but now you add the 2 and the 3 from the previous sequence, and you add those together, and now you get 5. So we skip 4. And then we add 3 and 5, and we get 8. And then we add 5 and 8, and we get 13. So that's where you get the sequence here, 1, 2, 3, 5, 8, 13, and so on. You just keep doing that for infinity and beyond. Now, why are they considered significant? And they're considered significant because, well, it all started with looking and analyzing nature mathematically, specifically patterns, mathematical patterns in nature. And so it was found out that these are actually an organizing principle of nature, a geometry, if you will. The most famous example is the Nautilus shell, but it also appears in all different patterns of nature, the geometry of how organic things are structured. And so it's built right into nature. Now, some traders do use the Fibonacci sequence, this sequence of numbers up here. W.D. Gann was especially known for doing that. Most traders don't do that anymore. What they do is they use Fibonacci ratios, and those are the numbers I was showing you, those percentages on the retrace. So what's interesting and where this started was that they found that each of the numbers in the sequence up here is approximately 1.618 times greater than the preceding number. And this is really the foundation of the ratios. It's called the golden ratio or the golden mean, and it's used in architecture a lot. And it is a very, very powerful principle. All right, so the other two key ratios are then determined by dividing any number in the sequence by 2 places to the right and 3 places to the right. So let me show you what I mean by that. So first of all, let's start with the foundation, the golden ratio. So they analyzed these numbers. So we came up with a sequence. And then they found, 61.8%. Here's how that's found. So we'll just let's start with 13. So 13 divided by 21, the next number in the ratio, 0.618. 21 divided by 34, 0.617. Okay, again, 34 divided by 55.618. So all within, very, very, very close to the 618 number. That is the core of it. So your pure Fibonacci traders, they're always looking for this golden mean here, this 0.618, or conversely for the extension, 1.618. So that's where we get that 61.8 retracement level. Where do we get the 38.2? Well, guess what? If you divide any number in the sequence by the number that's found 2 places to the right of it, you get that. So real quick, 13 divided by 34. So again, here's the number 13 in the sequence. If we go 2 places to the right, 34, and you divide 13 by 34, you get 0.382. Same with the next one, 21, go 2 places to the right, divided by 55, 0.381. 34 divided by 89, 2 places to the right of it, 0.382, very consistent. And the 23.6 is the same thing, except you go 3 places out. I think you get it. So again, 13, go 3 places out, 1, 2, 3, divided by 55, and you get 2.36. And that would be true of going 3 places to the right in the sequence, wherever you start. So this is the mathematical pattern. Now, this is where it comes from. So the golden ratio there is 61.8, 38.2, and 23.6 are secondary Fibonacci ratios. Now, where do those 50% retrace and 76.4 retracements comes from? Well, actually 50% is not a Fibonacci ratio, but it's simply been observed that it is a common support resistance level. W.D. Gann used it a lot, but W.D. Gann, do not confuse W.D. Gann with Fibonacci. They are not the same thing. He did use what this whole world is called market geometry. And there's different ways to approach it. Fibonacci is probably the most famous, probably the most popular. But that 50%, boy, that works out a lot. And so people have found that over time, and they've added it to the Fibonacci retracement tool. Now, there are people who will tell you, the pure Fibonacci people, they come up with ways of describing why 50% is a Fibonacci retracement ratio, that there's some relation to Fibonacci. I'm not totally convinced. I think they're trying a little too hard, but it doesn't really matter. I'm not that big into the theory. I'm into the making of the money. Does it work? Again, 76.4 is not a Fibonacci ratio. It's simply the mirror of the 23.6. In other words, we've got our 76.4, okay? And that is simply the mirror of 23.6, which is related to Fibonacci. So it's just 100 minus 23.6 is 76.4. Now, the people, again, who are pure Fibonacci traders, they don't use 76.4, they use 78.6. And again, where they come up with is they say, well, that's the square root of 618. Okay, that's cool. Either one of these numbers, by the way, these ratios are going to be so close, it's not going to be very consequential, but just slightly. And I prefer 76.4 simply through years of observation. I've been trading for, well, I've been literally trading for over 50 years because my dad was a stock trader. So I grew up with it, and he started having me place my first stock trades when I was 8. So I've seen a lot. But again, definitely not going to argue that point. So as I said, this is part of a bigger discipline called market geometry. You can talk about Gartley patterns, you can talk about astrology, you can talk about squares. So today we're just going to talk about these numbers here, the Fibonacci numbers. So again, Fibonacci retracement, we'll start now. We're going to go into the different type of techniques that you can use. All right, so now we get down to the nitty gritty, to the charts, and how to use it in trading now that we have that background. So again, you've got the major high, major low. That's the first thing you look for. I'm looking for ones that just stand out on the chart visibly, real clear, real obvious. And yep, this is a 2-minute chart. You could use this on 5-minute charts, 60-minute charts, daily charts, whatever. I would say, I mean, it does work very, very well on pretty much any meaningful time frame, but I would say it works the best on long-term time frames. But if you have a very high, highly liquid market, it can work on short-term time frames as well. The markets tend to just move in these geometric patterns. And if we have some time at the end, I'll tell you my theory as to why that is. So again, the key is for support and resistance levels. In Top Dog Trading, I have a 5 energy methodology. Energy 4 is support resistance, and that's the category that this fits into, support resistance. So we got to look at the levels beyond here, going into the future here. So because that's where we've drawn our tool to. So in this example, it goes up to 50%, and that provides resistance. Comes down to 23.6, that provides support. Goes up to 61.8, that provides resistance. Comes back down to 23.6, support, and you can see how it goes. So I would never use these levels in isolation in order to make money, because they don't work by themselves. They are one tool to add to your toolbox, and the place in your trading system that they have is, again, support resistance levels. However, look, right here you see this, the market retraces, and it just screams right through 23.6. It goes pretty aggressively through 38.2, and then it stops at 50. So the question is, well, how do we know if it's going to stop at 23, 38, or 50, or even go higher? And that's where you have to have other tools in your toolbox. So these are levels where you look to enter, exit, or take profits. But the main thing that you're going to be looking at when the price comes into these Fibonacci levels, or frankly, any other support resistance levels, is what's the energy of that market. In other words, when I say energy, I'm talking about the buying power, momentum, strength, volume. So resistance is not going to hold the market if there is a dramatic imbalance of supply demand. If there's a lot of buying and not enough selling to offset that, this resistance level will not hold. So these are potential levels where we look for the confluence of, in this case, we're saying, okay, we could stop here, we could stop here, we could stop here. They're decision levels. And then we make that decision based on the internal energy of money flow. And so when it comes up here, we look, oh, is supply and demand starting to get balanced? So right here, demand is stronger than supply. Here, demand is stronger than supply. Here, whoa, wait a minute. Now some selling comes in. And that momentum shifts. And that's the term that I use. We get a momentum shift at that high. And the way that I look at that, the way that I measure that, another tool, is my cycle indicator. So I have a cycle indicator, which, you know what, I'll give you guys access to the cycle indicator for free. Today's topic's not about that, but at the end, I'll give you a link where you can go and learn about that, absolutely free. And I'll show you how to set it up on your charts as well. It's not an indicator you download. I modify a common indicator, but you can set it up on any charting platform. So you need that as well. So I'll give you access to that also. So that's what you're looking for is, okay, and you're going to say, are we going to get a little momentum shift here? And when you do, and the indicator will show you that, then we come down. Now we'll get another momentum shift here. Do we get it here? No, let go screaming through, oh, and it happens there. All right, so that's Fibonacci retracement. Basically, what percentage does it retrace back to the original high? Now, here's tool number 2, Fibonacci extensions. So Fibonacci retracements measured the retrace back toward the original point. Now, the Fibonacci extensions are really, really powerful, especially in certain situations. Let's say that you've got, and I use Fibonacci extensions for targets, profit targets. So let's say we don't have any, significant support down here. All right, we've got that low, and maybe we had this low here as well. But now we got nothing down here to tell us where to potentially look for profit targets. And that's where Fibonacci extensions really shine, because they extend below this low to give you levels that otherwise don't exist. So this is the power. Now it's a 3-point drawing tool. So you go into your drawing tools and you click once, twice, and 3 times. And then it puts these numbers in front of you, not retrace, but extend forward. Now, since this is a downtrend, here you're looking for 20, again, same ratios. So market comes down, where's it go? 76.4. Comes back, 38.2, goes down to 100, and that's all she wrote. That, by the way, has a technical name. That is called a measured move. And it is used by a lot of professional traders. I definitely look for this a lot. And a measured move literally means that the market has gone from here to here, is 100% of the same price range as it was from here to here, your original markers from high to low. And that high to that low is the exact same. Again, markets have a geometry about them. And so that's a great place to look to take profits, look for that momentum shift of supply demand, but that's the area that we're looking to make decisions. All right, now let's put them together. This is where it gets really exciting. So we can use both tools on top of each other. So here is, let's see, we've got our low here and our high here. So I draw my Fibonacci retracements, and there they are. If it retraces all the way down, I retrace 100%. But here's your 23, 38, 50, 61, 76. So we got that for retracements. Now we can also add our Fibonacci extension tool from that low to this high to that low. There's your 3-point drawing tool. And now it draws levels above that high. And we look for where those two levels from those two tools congregate, where they get clusters. And that takes it to the next level. That provides an even higher probability of support resistance. Remember, that's all this is about, support resistance levels. So they cluster together here real tightly, 76 here and the 38 here. And yep, works very well. Here we get the 100 and the 23 congregating, and the market just kind of moves sideways along that, gets stuck into that zone or that cluster from the two tools. Now, here's something that very few people use. So first of all, this is common. Price levels. Price, support, resistance levels. Everybody and their gerbil uses some sort of price, support, and resistance. And you should, you got to. However, a chart is a two-dimensional object. We have price over here, but what do we have at the bottom? The bottom axis, we have time. And this is the thing that very few people use, which is kind of ridiculous that they don't use time in their trading, because a chart is a two-dimensional object. You only got 2 dimensions to work with. And if you don't have some sort of timing tool in your toolbox, then you are ignoring 50% of the information on a 2-dimensional object. In other words, you're ignoring 50%. And how do you expect to have a probability scenario if you're ignoring 50% of the information on the chart? Right away, you're toast. So Fibonacci can give you time as well. So let's look at this. So these are called Fibonacci time extensions. Notice that the lines are not horizontal, they are vertical. And that's because it is not measuring price levels, it's measuring time. So we draw our low from here to there, from that low to that high. Again, it always starts with that. All right. And you can see that, by the way, where I've drawn it from and to with this diagonal line right here. And so there's your 100%. Okay, so that's what we drew it to. Now, remember, these are extensions, so it draws them forward in time, which is very powerful because, well, I'm drawing it to here in real time, but I've got to trade into the unknown future, right? I don't know about you. My broker insists I trade into the unknown future where no bars have been formed yet. And that kind of is annoying, but that's what we got to do. So the question is, well, all right, so knowing that, how do I have some sort of indication where price is going to shift, where swing highs and lows are going to come into that unknown future? And this is one tool you can use. So markets consolidate, they go sideways until this, what? Time. There's your 123.6. And when we come into that time, that's when this consolidation ends and the market goes up. And we finish our consolidation there, and boom, that's the time the market goes up. Again, 138.2, market comes down, puts in a swing low, and that's the time it goes up. Okay, when does that end? At 150, it ends, and it's the time that this move ends and comes back down. And the same here. Now, let's be realistic. You'll notice that we got a pivot high or swing high here. No Fibonacci time extension there. So the truth is, these Fibonacci time extensions do not catch every swing high or every swing low. Do not expect that. It will not happen. And that's okay, because we don't need to catch everyone. We're not trying to predict every swing high or low in the market. All we want to do is catch enough of them that we make money. And so when we get the confluence of time and price, then we take the trade. The rest of the time, let somebody else with a different technique that maybe could catch that high, let them make their money. Share the wealth. We don't have to have it all. There's no tool in technical analysis that will catch every move in the market. Just impossible, doesn't happen, nobody does it. So this is just a tool, and what you do, this is called making the market come to you, if you've ever heard that term. This is basically what that means. You wait for the market to set up based on what your system is designed to measure in the market. There are all kinds of trading systems. There are breakout trades, retracement trades, trend reversals, volatility, exhaustions, so many different things. And they're all valid. Reversion to the mean trades. But when you have a trading system, you're like, okay, this is going to be my game. This is the game I'm going to play. And I just take those trades. So I wait for the market to set up based on what my trading system measures, and those are the trades I take. And this is the same kind of thing. And the rest, don't worry about it. Doesn't matter. As long as you're making money at the end of the day, you're golden. Now, here's a really exciting one that I see very, 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 very few people use. And it's a little trickier. I'm going to give you a, if you decide to trade this, I'm going to give you a little piece of information that's going to help you out a lot and keep you out of trouble. So these are called either Fibonacci circles or arcs. On your trading platform, depending on what trading platform you use, it could be called circles or arcs. The reason for that is because on your chart, it's going to look like an arc. See how it kind of curves there? Curves. These are not straight lines. So before we had straight horizontal lines, then we had straight vertical lines. Now we've got curved lines. Now, the reason that different trading platforms call it either arcs or circles is because, in truth, they are circles. If you scale out, you will see that it forms a circle, a 360-degree circle. But when you're, scaled in where you can see the bars and they're big enough to actually trade, it's going to just look like an arc. You'll only see part of the circle, but they're the same thing. Now, what's awesome about this is a time and price tool, both in one. So we drew it from here to here, boom, boom, from that high to that low. Oh, by the way, yeah, another thing that's really important about this, I forgot to mention, don't expect the highs and lows to come right to the pixel of the line on your chart. Okay, again, unrealistic. Markets are not that exacting. There's a little bit of noise always at swing highs and lows. And so in fact, this is true of all support resistance, not just Fibonacci. All support resistance levels are zones. And that's very important to take into consideration because we draw them as lines on our charts. But conceptually, or in reality, they are not really lines. They are zones. Because you got to think the market, whatever time frame you're using, whatever part of the world you live in, whatever your data speed is on your internet connection is going to be a little different than someone else's. Someone else's internationally, now that all the markets are international, and therefore there's always, you got to give it like a bar or two, or a little bit of leeway. There's zones where that supply demand shift is occurring, and nobody's looking at the pixel of the line that you drew on your chart. So, and that's true of all of this. So they're the zones. Okay, so we drew from this high to that low. Whoops, there we go, that high to that low. And it creates this arc, this curvature. So now in one tool, we're measuring both time and price. Notice how price comes up, it comes down, hits this line, rides the line, and what we're looking for is for it to break away from that arc. And again, you got to bring in your cycle indicator and look for your momentum shift here, because this is good, but the thing that really makes markets move is supply demand imbalance. That's all that makes markets move. All trading comes down to one thing: supply and demand. If there's more demand than supply, market goes up. And by the way, it'll go up regardless of, if it's a stock, whether that company has good financials, or whether the company, whatever the PE ratio is, or maybe it could be overvalued and it will still go up if people are excited about it, excited about that company's products, they're emotional about it, people will buy. As long as people are buying for whatever reason, that stock will go up. Same with Forex pairs, same with futures, same with options, commodities. It's people and the algos that people have programmed. And it's not always logical. Not always logical. People are very emotional, and it's mass psychology, which is different than individual psychology. There's a herd mentality that kicks in. And so we just look at the facts. Wherever it's going up, wherever it's going down, doesn't really matter for short-term trading. For long-term investing, that's a different story. Yes, I do very much care about valuations. But for short-term investing, 3-minute chart here, even on a 60-minute chart, it's just people's actions, people's behaviors. If they're buying, and if there's a lot more buyers than sellers, the puppy is going to go up. Simple as that. Okay, so now because this is a curved line, it's measuring both time and price. So you notice over here, the time would be here. Here, the time is there. It's adjusting time, and there's a price level for it as well. And so now you got one tool that brings together time and price. Comes back down, no indication here. Let somebody else make that money. Price comes back up. There's our next arc. Sure enough, market puts in another high at this time, at this time, and that price, and the market goes down. Now, as I've been saying, these are fantastic tools to use. One piece of the puzzle. Top Dog Trading, I use 5 uncorrelated energies. So when I talk about the energy, I'm talking about the energy of money flow, the buy, the sell, the supply, the demand. So for trend is where I start. I've got a 5-step methodology. So don't have time to go through all of it, but just to kind of complete the puzzle since I made reference to it. So the first thing I look at is trend. That's step 1 in my methodology, up or down. We want to be in the right direction of the market. Number 2, what's the momentum? Is there strength in the market? You can have strong trends, you can have weak trends. If the trend is weak, I'm not trading in the direction of the trend. Trend is not your friend if it's weak, if there's no momentum behind it. So I want to get early in a new trend. I want that trend to be strong, meaning there's lots of buying coming in, and this is where volume comes in as well. I would love to have professional traders involved, big institutions, big volume. Then we use our cycle indicator, which again, I'll show you how to get that. Support resistance, again, Fibonacci, but this is also where previous swing highs and lows comes in. You could use floor trader pivots. I love Fibonacci. And then step 5 is we look at another time frame. So I call this the fractal energy. I never trade just one time frame. So I look at the next higher time frame, and I'm making sure that the short-term time frame aligns with the momentum, not the trend. Don't care what the trend is on the longer time frame, but I do care that we have momentum. It's got to be bullish on both time frames or bearish on both time frames. I'm not going to trade against the momentum of the longer term time frame, because again, remember that strength. So I simply, my trading method's very simple. At each point, I look at that and I say, okay, how many of those 5 energies are aligned? I give it a score of 1 to 5, depending on how many of the 5 are aligned, bullish or bearish. Higher the score, obviously, the higher the probability of the trade. It's kind of like taking each trade to court. I need 5 independent witnesses to establish a preponderance of the evidence. So again, the point is that these 5 energies of money flow are each uncorrelated to the other 4. And that's what gives you a probability scenario. So real quickly, just give you a couple of examples here before we finish. So I just simply use the 50 SMA as my intermediate trend indicator. That's energy number 1. And I don't use higher highs and higher lows for trend. That's too short term. Dictionary definition of trend is to extend in a general direction. So we need something that measures long-term moves for trend, not short-term. So lower high, lower low, it's just a complex retrace. That's not a trend. For trend, I need something that moves a long distance. Why? So I get a big reward. Trend trades should be good risk-reward ratio trades. Energy number 2, momentum. Here's the momentum indicator I use. Again, trend is up, 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 higher high, higher low, higher high, higher low, higher high, higher low. Okay, with a whole series of higher highs and higher lows. Now we got a trend. But wait a minute, momentum shifts down. Remember I was talking about momentum shift? Higher high on price, lower, or I'm sorry, higher low on price, lower low on momentum. Higher high on price, lower high on momentum. That's your momentum shift. And that leads trend. That's a faster indicator of the trend. I'm out here, done. That's how I stay into a trend. By the way, even in kind of sideways markets, you can get these where you get the momentum shift before you get the breakout to the downside. Cycle, there's my basic cycle indicator. It's a little more sophisticated than that. But this is where you identify and nail swing highs and swing lows. And again, even in sideways markets, cycle low, we determine it's going to come in there. Cycle high is going to come in there. And low, high, low, high, low, high. And this is where you time your entries to the penny, the pip, the tick. Support resistance, we've talked about that already. And the fractal energy. So here I've got a 2-minute chart on the left. So we're in a downtrend. We've retraced to resistance. We've got a cycle high. Momentum is down, it's below 0. So score 1, downtrend. 2, holds resistance. 3, cycle high. 4, momentum below 0. Energy number 5 of the Top Dog 285 energy method, we go to our next higher time frame. Momentum is down. We've got strength down on the long term, strength down on the short term. That's a 5 out of 5 trade. That's what it looks like. So very robust and adaptable. The method works on any market, any time frame, because, well, the indicators automatically adjust, because remember, indicators are math formulas and they're empty. So what are they filled by? They're filled by data. And those indicators are filled by the data of whatever market you put on the chart relative to whatever time frame you set that chart. And that's why this will work and does work with any market. I trade all 5 of these markets. I invest, I swing trade, I day trade. It's simple, it's objective, and you can count to 5, you can do this. So here's my offer for today. Again, nothing to sell you, just going to give you some cool stuff. So I'm going to actually give you, in fact, here's what we're going to do today. I'm going to give you my rubber band trade for free. This is a try before you buy, or try and never buy if you want to. So I don't sell, I just educate people into my program, and I like to produce results in advance because, I know if I tell you a lot of stuff, you'll question it and wonder. I just want you to prove it to yourself. So I'm going to give you one of my trade strategies for free called the rubber band trade. Go ahead. I encourage you to test it out on a demo account or simulator account first. Do not trade it with real money until you've proven to yourself that it works. And as part of my free course for you today, make money by breaking every trading rule you ever learned. There's just 5 videos, about 20 minutes each. Get some quizzes in there. And then also you'll get access to a recorded webinar, so you can watch it whenever you want at your convenience. And that's where I give you the cycle indicator that I've referenced today as well. And that you can set up on any charting platform that you want. It's again a modification of a common indicator, so there's nothing to download or import, and that's why it works on any charting platform. So you just go to rubberbandtrade.com. That's as simple as that, and go get it. Prove it to yourself. I know what I do works, and that's why this is the way that I promote. I don't need to sell up front. I just I give you good stuff and give it to you for free and let you prove to yourself that it works. And that's it. So I've got, wow, I made it 2 minutes. All right, so I'll open it up for any questions. If you guys have any questions, I'm here to help you. Let's see, I'm gonna type this in, rubberbandtrade.com. There we go. And let's see if I can type that into the questions box as well. Send to all. I'm not sure if that's getting in there or not. Actually, I'm not seeing it come into that at all.
Barry, can I help you with that, please?
Yeah, can you type in rubberbandtrade.com
Sure.
into the questions box? For some reason, at least I'm not seeing that it's getting put in
Sure,
there.
it's already there, and we have few questions, if you don't mind.
Okay.
Why is cycle not a trend? Asking Rodriguez.
Why is cycle not a trend?
Yeah.
Well, they're just two very totally different things. So trend is the long-term direction of a market. Cycle is just a swing high or a swing low. So the scale or the time of them is totally different. Trend is direction up, 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 or down, 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 down. Now, within that trend, let's say an uptrend, you have highs and lows, highs and lows, highs and lows, oscillations, right? Those highs and lows, those are the cycles. So a cycle is a very short-term measurement where you can, so for example, if we're going to buy a retrace in a trend, the question is, all right, well, how much is this going to retrace before the uptrend continues? That's what the cycle tells you. It says when, and again, it's a timing indicator. So we're using the time axis of the chart, this and this. It's a timing tool, and it tells you when that retrace will end, and the market will then continue in the direction of the trend, in this example, up for the long-term move up.
The next question from Heather. Which FIB is the best to use out of these that you showed?
Which of the Fibonacci ratios, is that the question?
Yes, is the best to use out of these that you showed.
There is no best. There is no best. That's why you put all of them on your chart, because none of them are more reliable than the others. Now, pure Fibonacci theorists and traders, they will say the best one is 61.8. I am not a pure Fibonacci trader. I don't think it has as much value as those people do. They have value, but just those levels alone no one has more value than the other. And this is me talking. So we use them as potential support resistance levels, where we look for, then we got to look at the actual dynamic of money flow. When is that supply demand shifting, and that momentum is shifting in the market? So this is, again, where we're looking for the confluence of price, that's your Fibonacci levels, and the timing of when that shift happens. And sometimes the markets retrace very shallow, sometimes they retrace very deep, and no one of those is in itself more significant than another.
Andrew asking, do you have a contact number?
Yes, if you go to my website, you can see my number there. Unfortunately, I'm so busy and I have people want to talk to me all day, every day. So I don't, take phone calls personally, but our company does. And you can certainly email me. In fact, Anna, if you could put in my email address, everybody's welcome to send me an email, barry@topdogtrading.com. I'll go ahead and type that into the, let's see, I typed it into the chat. Again, for some reason, I don't seem to be able to, oh wait, maybe I do this. Yeah, there we go. Okay, yeah, I've just figured out how to do that. So yeah, everybody's welcome to send me an email. Any questions that you might have, be very, very happy to answer them.
Another question, why didn't you draw the Fibonacci arc on the higher high on the middle of the chart?
I'd have to go back and look at that. I'm not sure at what point they're referencing. So I think I did, but obviously they're looking at a different point than I am, and I'm not sure at what point they're actually referencing there. So hard for me to answer that question.
Do you use MACD for momentum?
You can use, I mean, there's so many different momentum indicators. So, choose your favorite. I've got mine, which again is a proprietary that I only give out to my my own personal students. But yeah, momentum is kind of or I'm sorry, MACD is kind of a momentum indicator. There's actually the indicator called momentum. You can use that. There's, choose your favorite. RSI is another very common one that a lot of people like. So, the key is to find one that you like, learn how to use it, learn its details and what it really measures and when it's telling you something significant and when it's not. And most of the time, most indicators are not telling you anything significant. So a big part of learning how to trade an indicator is, number one, understanding the math of it, because they're all math equations. So really understanding, not just saying, oh, it's lines and I'm going to trade in the direction of the line. That is nothing. That means nothing. So you've got to really understand, okay, how is this thing designed mathematically? What is it designed to measure? What's its limitations? And learn how to interpret it. But yeah, you can trade, as long as you learn the momentum indicator, whichever one you choose. There's many to choose from, and most of them will be pretty good.
When do you draw the Fibonacci time extension from high to low, and when do you draw it from low to high, please?
That's a good question. Boy, a little hard for me to answer that in detail with the small amount of time that we have here. So again, it depends on what tool you're using. So if you're using Fibonacci retracement, we'll just go with that. If you're in an uptrend, then you're going to want to draw it from low to high. If you're in a downtrend, then you're going to want to draw it from high to low.
Thank you so much. I guess that's it for today. I can see no more questions coming.
All right, Anna. Well, thank you so much for the invitation. It's been a pleasure. It's always a pleasure working with you. And to everybody here, thank you so much for being here and for your participation. Really respect that you all have taken time out of your busy day to be here. And if I can help you in any way, you've got my email address. just send me an email. I'll be very, very happy to answer any other questions that you have. Just send me an email at barry@topdogtrading.com.